doesn't work. That should do it. That should do it right there. Yes, what's happening, gang? Hope you guys are having a fantastic day. We're getting started. Give me one moment. Hope you guys enjoyed yesterday's trade. We still got that win at the end of the stream. It was very good. Very, very good. Very happy with this. We run it until like 40 pips or something like that. We net closed a little bit over 35, something like that pips as well. It was nice. It was good. Amazing yesterday. It was a good trade. Let's continue our journey here. Let's put on something else as well. Give me one moment. There we go. All right, what's happening, fam? Hope you guys are all doing well. We're looking at again a beautiful trades journey today. We're gonna see what we're gonna do here. Let's see what we have. What do we have in the building? Let's have a little look here. A little bit of a late start again today. We had the V3. We launched the V3 with a lot of things that we had to arrange here. Overall, good start. A lot of things to work on. But this is exactly what I wanted. This beginning was very, very well set up. So, back at it for the New York session. Gonna continue our journey here for the prop firm challenge. Indeed, we're doing this live on stream. Of course, besides my own trading and so on and so on, I want to make sure that I do a prop firm challenge live with you guys on stream. Just trading gold, GJ, and the US30. Keeping it as easy as possible right now for you guys here. But yeah, a couple things that we're going to discuss here right now. We're going to talk about gold, but also the dollar is important. Okay, we're going to talk about the dollar as well. Why? Well, the dollar is showing some potential right now. Okay, back to the upside. I have some areas of resistance here, but overall, we are looking like we potentially can make a move here to the upside if we break, especially this particular level right here. Therefore, that could include that gold can potentially come down a little bit more than it already has been coming down for. Right now, guys, yesterday we took a short at 1918, 1917 to be exact, 1917.5. And it's now at 19.6 and it broke a very important level. And look what we have here. I just wanted to show you guys this chart right now because if you look, let me show the one chart real quick. Let me see what we have there. I think that makes more sense for now. There we go. Look at that gap. Look at that gap that we have here. We were like, okay, if you can break the previous low, we can flip bearish on the weekly like we did yesterday. We flipped bearish at the 1921. This was where the major support was at beforehand. We flipped bearish. I think we have pretty much nothing else again until the 1800s, like the 1880. You know, we actually came below here. I think there is still a possibility that we just come down. And looking for the continuation here. There are still some scenarios where the dollar could flip. And if that happens, we're going to see potential bounce. And we will potentially trade this bounce to the upside. But based on the structure right now, it seems that gold just wants to continue its journey to the downside right here. Especially when you look at the daily chart. You know, we had support at the 19... we had that area of the month, right? So we were talking about this area of the month yesterday. And at that given moment, we were still above it. And we said there is just a lot of selling pressure coming into play here. That is potentially going to prohibit us from moving further up, especially because we're getting pushed down and so on and so on. But right now we're in the middle of that the month here. And we're actually breaking this. And the major support, I believe, was at like 1913, 1914. I think it was 1914. And what happened was we actually closed below it. And now it seems that we want to come down all the way to the 1903.8. And what I did before, and I think this is important for you guys to mention as well. Every single day right now, I'll post a video voice memo.
Hi guys, a quick update for the stream. I'm not interested in a trade.
Talking about gold, talking about everything that I'm actually talking about right now. But already a couple hours beforehand. So you guys can already prepare as well a little bit. Just because then you guys are completely ready. So a couple hours ago, we shared the exact same thing as we're going to explain right now. But if you are just tuning in, I still want to give you an explanation. So, you know, the 1903 here, slash the 1904, let's say the 1903, I think this is the best example, is actually where you're going to find a lot of support in my opinion. So if you're going to see a bounce from there, then yeah, this is a likely possibility. So let's say you come down and you break actually below it and you close below it, we might just be looking at a continuation to the downside, right? So this is definitely something that I'm looking for in regards to that particular momentum right there. The other one is, of course, the opposite if you decide to flip it with the dollar, which in my opinion is a possibility though. But again, we really need to break this, or we need to get rejected at this area of the supply right here. Okay, we have the zone right there. If you get rejected there, then in my opinion, when look at the dollar, yeah, then there is a possibility that gold will flip and will actually bounce from the 1903. I think there is definitely a possibility. So if that happens, okay, what I'm gonna do is I'm gonna look at a little bit lower time frame, and I'm gonna see if we can actually trade that bounce to the upside. But if we actually come down and we break and close below it, I think you can just start looking for sells below that level right here. I think that's the major support. There is already support right now. Initially, if you look here on the 4 hour, you have some support around the 1906 already. The 1905, let's say 0.8. No, 1905.8 right there. There is already a level that we should highlight. But again, if you break below it and you come to that major support, I don't see a possibility of shorting below here when immediately right there is the next level. It's a little bit too tight in my opinion. But yeah, let's see from there. We can still highlight it and see from there. Overall though, if you do decide to break above the 1912 and above the 19, yeah, this is of course the major level where we shorted from yesterday. We can look for longs here. So I think that this is a nice area to sell from. I think there is like a 75% possibility that we're going to continue our journey to the downside. All right. That's gold. I do believe that there is a likelihood that we will, come down. However, if it doesn't happen, we zoom in, we see where we can bounce from, and we see what happens from there. And if there is a possibility to look for potential longs, if we break serious highs, which is like the 1912, 1917, and so on and so on, which is for now still a little bit far away. Then the next layer is GJ. Same scenario. We have been talking about GJ as well here. And GJ right now is right here, coming closer and closer to this major monthly area of resistance, which you're going to find in this level right here, the 185.2. We are not there yet. Okay, we are still pretty far away. So is there still some more upside potential? I do believe there is. But if you do close below this following level, that is the 182.5. The 182.6 here. I'm potentially look for sales below that level. Okay. Coming down, closing below, giving us that candle wick, shorting from there, and then taking it further to the downside. Because overall, when you see that closure happening, there is a nice possibility that this will actually come into play here. But what needs to happen? And I would love to hear your opinion right now for the people that are joining, that are part of the live streams already for a while here. What would you like to see happening right here? And I'm not even going to say anything right now. I just want, very curious if you guys know exactly what I'm talking about, because that would be amazing. Then we're seeing if you're on the same level here. Let's have a little look. Let's see what we have. Already 160 likes right now. That is absolutely amazing. Thank you so much. We're heading almost to the 200 likes already. I appreciate this. Let's continue momentum, guys. Ever since we started with our, our new execution, and we just started to focus on gold, GJ, US30, we have been crushing it quite heavily here. We had no losing trades yet. So let's just continue our journey and enjoy and, look at the dollar for confirmation, the yen basket for confirmation. That's exactly what I mean indeed. We need to close above the 6,911 for the yen basket. Okay, if we want to take a if we want to take a short on GJ, we need to close the yen basket above the 6,911. look at every single time when we came here and look at the rejection we saw here. Okay, 1, 2, 3, 4, 5, 6 times we got rejected right there. Okay, a body closure above is an absolute necessity for us to give us that confirmation for potential GJ when GJ closes below. That combination of Japanese yen closing above here in combination with GJ closing below is, in my opinion, a fantastic combination to look for potential setup here. And based on the dollar and the negative correlation, we can find external confluences as well that can provide us with better information to look for a trade setup. But overall, I do believe that there might be a possibility that this week we will finally see GJ coming down here. Okay, look at how we were building here, what we are doing currently. You know, we're preparing for something. We are preparing for something. At some point, we have to pull back. And I think we are coming closer and closer and closer. However, again, the majority of resistance will be all the way there. So if you close above these highs here, which is the 183.427, okay, and the yen basket gets rejected and actually starts coming down and flipping here, then I think there is a big possibility that we can actually start looking for potential longs again. Okay. Yesterday, GJ actually also played out. Yes. We were talking about GJ. We're talking about the US30. We're talking about gold. All three of them played out. We only took gold yesterday as an actual execution. I just want to focus on one trade at a time. But yeah, we did came up. We did came up after that closure. And I know that some people in our community took it. So yeah, it is an interesting setup. Pay very close attention. Again, potential buys above it for the continuation and sells below it for the continuation or the reversal to the downside in combination with the yen basket, of course, giving us that confirmation. So we have gold, in my opinion, right there. We have GJ right here. And then the last one, and I think that's the foundation that we need for now, is the US30. Okay, US30 is looking strong. It left us with that gap below. Okay. If you look at the volatility index, we can use this one also real quick here right now. Let's see what the volatility index does. Yeah, I do believe that there is a possibility, and like now we're doing exactly that, pretty significantly. Okay, we're following the exact momentum for the downside here. I think there is still a possibility that the US30 will come up a little bit more until we're coming back to this daily area of the month. Okay, we're talking about this particular zone. Coming back into this zone here, tapping into this area, and potentially seeing a rejection happening from this zone. So again, that means coming down, looking for the continuation up, and therefore US30, of course, doing the opposite, coming up, and then potentially coming down. And that potentially is the flip that we have been waiting for already for a while. And I'm very interested in actually looking for a trade setup from there. But for now, I do believe that yeah, we have to see and observe a little bit and see what we can do. I'm gonna be yeah, pretty bullish still for now, and that includes potential buys above the 34,000. Okay, coming back into that gap here that we filled beforehand, but not completely. We still have that gap that has not been completely filled here, right there. That's a very nice target as well, coming into that zone. I think that there is definitely a possibility that we're looking for something in that manner, where we look at body closures, and that should be around 32,980. Look for the continuation, while the VIX is actually still potentially coming down here. All right, so there is definitely some potential in regards to the US30. Yeah, let's see how we develop and what happens during the New York Stock Exchange Open if we start to range right now. But we're already getting to an interesting level. But the question is there enough volume to help us out here, to support us with our potential position right here? So, yeah, it's US30. Okay. Sells below potential buys. Okay, I'm not sure yet. So I keep it as potential right here, because there are a lot of other credentials that or variables that do make more sense that we need to wait for in order to move forward with that. But yeah, US30 and gold below here. Okay, there we go. And yeah, And I want to use this one right now as a potential catalyst in order to look at some setup here. We have indeed Uncle Jerome speaking at 9:30. Okay. We are going to find out what he's going to talk about. I think it's going to be another Q&A here. And it's going to be more ahead of the interest rates. I think this is going to be an important one here. Okay. It's going to be about the monetary policy and everything again. So very curious what we're going to do in the near future. I personally believe that there is a chance that we're going to again increase these interest rates one more time. And this will, of course, will make sure that potentially the dollar will shoot up. Therefore, if that happens, gold will come down further as well here. So, anyways, let's see what he says. We will find out in a couple hours right here. All right. There we go. Beautiful. Lorenzo, can you share the link of the Excel sheet for the trade monitoring? Yeah, I will share it with you right now, my friend. Absolutely. Let's do it. We will put our trades in this as well here. I think from next week we have everything updated and we are ready to rock and roll with that spreadsheet to build it up and see what we have from there. There we go. What you need to do though, bro, is you need to make a copy. So what you do is you look at it, you open it, you click on it, and then you go to File, and you click on Make a Copy right here. So it copies it to your own account or sheet or whatever, and then you can start editing it from there. All right? It shows everything from the date, the time, the session, the pair, long, short, entry, entry execution, entry price, closed, win, loss, break even. Okay, for now we had only wins here since we have that new strategy. Amount secured, percentage gain or loss. Before entry, after entry, some notes. I would highly recommend to put some notes there for you to just use it. And yeah, fill it up, use it and practice and put it in and learn to analyze and to put the data in. And you should be good from there. Okay. Robbie, hi mate, Lorenzo, there was an event where I went and said these online live streams won't last long as range to range or small time scalping traders will lose eventually as breakouts have only 50% win rate. Yeah, that's why we wait for closures. That's why we have a lot of other variables, a lot of other confluence come into play here. We're looking at the yen basket, we look at the indices, the correlations of them. There are so many more metrics to take consideration, just the breakout execution. Because indeed, I agree with you. When I was trading breakouts, I was not as successful as I am right now with this particular strategy here, leveraging all the confluences I have. So yeah, 100%, absolutely. Is the link working for everybody? It should be working, yeah. Okay. Otherwise, you have to go to my to the video on my channel, which is called how to avoid fakeouts in the market, and there it should be in the description. You'll find it right there. Of course, so this strategy will last long, right, bro? And did you make those as profit, not questioning? If you use it the right way, if you wait for the right closures and you do it the right, and you execute trades on the right moment with the right structures and the candle structures, and you do things the right way, then absolutely this can work definitely very well. How much I risk on each trade on the Pop Friend Challenge? I risk around 0.5% at the beginning, and I scale it up to 1% later. Once my, my profit is higher. Keep pause your challenge. It's about, building, your foundation, making sure that you can avoid going into drawdown at all. And then from there, we can start increasing the risk a little bit. The reason why is because it's a balanced-based challenge. So it's not based on equity. Equity means pretty much, equity-based means pretty much if you, are allowed to only lose 5%, then when you make 3%, then the next day you're going to be able to only lose 5%, even though you made already 3%. This is balanced-based. That means right now that instead of 5%, you can now lose 8%. You build up the amount you can lose, and therefore it's better to start slow and just scale it up to then scale it up during, once you're in profit already, nice and steady. Something wrong with the internet? No, I don't think so. I think everything should be good. Just pause it for a second or refresh it. Should be working. Okay. So, yesterday's gold trade eventually was actually the prime example of how we execute a position when looking at the candle structure and the flip. I think the flip of that candle after closure is one of the most important ways to enter. And I will make a video about this very soon. Explaining again one more time where that entry is coming from exactly and why. From there, so it becomes more natural to us as well here, and that we all know exactly what to do. I will talk about these top wicks, these bottom wicks as well, and everything that we need to know about that. So we are fully prepared, and of course how we implement the correlations and what are we looking for on that front as well. So we know exactly when to avoid a setup and when to take it, or when actually to to improve it from there as well. So. Okay, shows how the gold trade went. Yeah. We were looking at the 30-minute. And what happened was, okay, we broke below, and that was a major level. The 1921, let's say. And we had a major news event. And we were like, okay, potential sells below that level. And what happened was when we broke below it, let me see if I can clear it up. Let me go to another chart real quick so it doesn't, we don't make it confusing here. Let's see what we have. Let's go to this one for a second here. So what happened was we had the 1921 here. Okay, we had that level. We came back and we broke below it. Okay. And I think this is something important because there was support at 1917, but there was a specific reason why I still entered my position. We had this 1920.6 right there. That was a level where we initially wanted to say, okay, we want to sell below it. We did, however, wanted to wait for closure. Okay, I do not enter on breakouts all the time, or not at all, actually, just because I realized that I was losing much more over time with breakout trading. I was making much more money with waiting for closures and like anticipating on the closure. Sometimes, yes, I miss out. However, the amount of times it saved me, it's just a crazy difference in general. I think that's important to mention here. So what happened? We had to come down, and we came down. We had the news coming out. And during that news, we broke, and we eventually closed below that level. Okay. And people were like, yeah, but there is support at, 1917 and so on here. And that's true. However, there was a reason why we still entered above. And that was our next candle. Okay. What we did was we came up, okay, quickly after that closure. And we immediately got suppressed down again, which caused the candle to flip bearish. You know, trapping a lot of people that bought initially here. At the same time, you have to understand that whenever there is news coming into play, there is so much liquidity that is left behind below as well. That was not taken out yet. And what tends to happen is that people think that, oh, we flipped, we immediately got bought up so heavily, we're going to reverse now. Usually what tends to happen is that you still come down to start, you know, at least fill up that wick here, especially after that confirmation, to then just look for the continuation potentially up, to then look for the continuation up or come down from there again. Anyways, we're looking to fill up that wick. And it was just a wick fill scenario that we were looking for. Now, the moment we flipped, that was the exact moment when we entered the market. And there were two scenarios where we could take a trade from. First of all, we had a short from there. You could place your stop loss above. You could place it above the last candle. A couple different scenarios. Of course, you're going for the wick fill target. And that's what we did. We waited for it. It took some time to eventually break. But that was the core reason why we were like, okay, people are trapped here. There's a bunch of liquidity below here. The dollar was increasing strength. All right, the dollar was absolutely gaining momentum. It filled up the wick below and it created a strong bottom wick and it came up. It was another confluence for me. Helped me a lot. Therefore, that was the reason why we entered exactly at this level. And we took it down and I think we closed it roughly at around this level right here, which was probably around, and I believe, around there, a little bit higher, around here net. But it came down a little bit below already beforehand. It started to recover a little bit. What it did was it came up and it came down from there. So that was initially how it came. We came up and eventually we decided to still move further down from there. Okay. And that was the trade that we took. In combination with the dollar confirmation right there. So now we broke such an important level that I do believe that there is a high likelihood that we look for the continuation to the downside. But yeah, let's see. Let's see what it will bring us today. For drawing support and resistance, do wicks to be considered? Sometimes yes, sometimes no, but I prefer bodies over wicks, always. Bodies over wicks, but then if there is a wick and a body closure and you see that confirmation, then of course it could be acting as an extra confluence as well here. Spreadsheet don't work. Yeah, go to my channel. Go to This Is How You Vote Fakeouts in the Market. And you'll find it in the description. GJ, yeah, so GJ, it will be very, very interesting below this level here. Okay. Which is the 182.5. 182.6, and if you truly close above it here, we have not closed below it before. There is still a potential possibility that we're just going to look for the continuation to the upside here, coming to our end target, which is the 185. That's like the final target I'm looking for at that particular moment. So yeah, 25 minutes till the New York Open. Gold is nicely coming down here. So we have this level. For GJ, for USD30. USD30 is also coming up here. I would actually love to take a short from there. I would love to take a short from this level here at 33,900 because it's such a clean level to take consideration here. Coming down, getting rejected, and just crushing to the downside here. Absolutely interested in that here. Gold is reaching our first level here. Let's see what we have. So we have this zone. Yeah, it's roughly like 19.5. Yeah, roughly there. Yeah, beautiful. Yeah, let's see how we develop here and how the dollar reacts as well when we're tapping into that zone. But yeah, we might be looking to short it a little bit earlier as well if gold indeed decides to continue down when the dollar breaks up here. But that depends on the dollar. So far, the dollar is coming to this zone, and that's why I'm not that confident yet for gold unless we break the 1903. I think the 19.5 is a possibility. It should be around this level. But because of the dollar being now in that zone, and let's say it comes up and it gets actually rejected at this level here, at this stronger high, and you come down, what you're going to do then is you're going to come down and you're going to come up again. So I think the 1903 is a much safer short from there. A much safer possibility than the 1905, even though this is a potential level to take consideration. But when I look at the dollar and looking at the way we're starting to come up, you know, like this, the consolidation, the expansion that we trace with the continuation, there are definitely flip possibilities to take consideration here. Okay, that's why I want to be very careful with, or very aware with the fact that this is absolutely a potential setup that could come into play here, a potential switch, you know, taking us back to the 1911, 1912 and look from there here, coming back up towards that to that zone here. I would look at the 1912 in order to get there. But yeah, I'm going to pay very close attention to the dollar and the behavior of the dollar during the New York Open now, while gold is potentially breaking that low here. And from there we'll potentially decide if we can take a short, but a short below the 1903 is, in my opinion, a very strong confirmation. So, yeah, look at dollar index when broken. There we go. Yeah, press a win in the chat if you made some money yesterday as well. Give me some nice motivation here. So far, I'm very happy with the way we have been reducing the amount of pairs, focusing on a couple. And I'm also very happy with how the dollar is moving right now. The dollar reaction, the dollar index is showing us some good, like, predictable motion right here. Lorenzo, is your IG private account not open for us to follow? We have a... yeah, Telegram is coming soon. Not an IG. Oh, yeah, of course. Yeah, sorry, guys. You have these channels now. Okay. You have these channels now on Instagram. So we have Lorenzo Corrado FX. We're going to open a channel there. And it's going to be much easier to share the setups in there. It's like a Telegram, but then on Instagram right now. It's super nice. Because this could be ready
the
on the meta charts, but it's also very nice to have on Instagram. because of the accessibility and stuff. So it's you guys immediately know already a couple hours before what we're looking for here. So what I pretty much shared with you guys right now was already shared in the Mented charts right here a couple hours ago. Okay, so therefore, if you can do this on Instagram, it will be absolutely amazing here. Lorenzo, talk about prop funds and how can you make serious money in prop firms. Well, my suggestion is with prop firms, to just increase your overall chance of passing one, is to focus on one strategy with one pair, one session, and try to remove as many variables as possible to just get the flow of trading a little bit and get the hang of it. Don't buy a big challenge because you just think about dollar signs. Irrelevant. Just focus on buying a small challenge, get into the flow, get familiar with the pair you trade, and try to improve from there. And once you have the confirmation, use your profits, compound these profits to buy bigger challenges, and take time. Just take your time. That's all I can say. Do you trade with breakout method, not SMC? No breakout method, no. Closure method. So yeah, breakout, closure. SMC is still relevant. We find ways to combine both a little bit. But the most important part is to use correlations. I think this is the most important part for me. Because if the correlations do not align, I do not take any trades here. I need to know what's happening on the other side. I would not say it's a retest. It's not really a retest of a level. It's a flip of a candle. So yeah, I'm just very curious if you're going to see rejection here for the dollar right now. I think this is the most important part. Because we're coming closer to this overall bigger range. And if the dollar fails to break above it, then what is going to happen? Well, we are going to reverse. And then the gold should be pushing up here or bouncing at least from this area of support here. Or in general, a reverse. There is a possibility. So I'm very curious to see how we develop. If we just go straight through it, then of course we have our confirmation. So yeah, I'm not saying that gold is going to come up, but if the dollar gets rejected here, there is definitely a possibility. There is definitely a possibility. My brother, how do you determine the daily bias or direction for today? Well, good question, my friend. Very good question. My suggestion to you is to go to the gold chart. Whatever chart you're looking for. Zoom out. Start at the weekly. And just look at the previous candle. And the body of the previous candle. Where's the body closure? Okay. On this case, was it 1921, right? Or 1990? I think it was at 1921, to be honest, on the other chart. But anyways, it was right there. We had that gap below. There is quite clean traffic there. So overall, if you look on the weekly, you look quite bearish. The daily closed below, or is now acting previously below the previous daily chart here, the daily candle here. Okay. So usually when I look at the previous daily candle and I see something like this happening here, and you have that nice top wick, then I remain bearish for the rest of the day. But hey, if you can push up right now, you can close and we can flip. But overall, the main direction, the main bias is bearish on the daily chart. And then you can start zooming in and you can go to all these levels and look for, the reaction and so on and so on. Sounds similar to donvo strategy. I don't know what donvo strategy is. I think the people that are coming here often, they know better, I think. So the dollar is now in that zone. We're almost there. Okay, we're now in that zone. We're tapping into that area here on the 30-minute. If you get rejected here, then gold could flip here. So that means that there, if you could see potential, then there is potential. There is potential of a flip. Look at the way gold is building that liquidity to the upside as well right now. So yeah, no, there is definitely potential. GJ drop. There we go. Okay, that's some serious stuff right now. That is some serious stuff. Okay, let's look at the Japanese yen. Okay, we're coming up. But keep in mind, every single time when we came up here, we got rejected. We have 11 minutes left. Every single time we push up, we come down again. That means that we will get trapped in GJ if we take that trade right there without the confirmation. So the yen needs to close a body above here. GU is dropping hard. Okay, that means not the yen itself is doing the work, but the British pound index is actually coming down right now quite heavily. I think that's then the reason. Yeah, we're seeing that rejection point here. I mean, I like it. I like the combination of the British pound index in combination with the yen basket right now. Are you gonna make a full video about your strategy? There is definitely, yeah. I'm doing it in parts. So what I do is pretty much, yeah, a full strategy for the live streams. Could definitely be the case, yeah. We can make it. To be honest, I would actually be super surprised if you continue down here in the short term. I'm just saying, but yeah, if that's the case, then we will still potentially look for a setup. If you decide to come up here, I think there is a possibility here. If you decide to really come down, then the dollar needs to just break and smash through all these levels right now. But look at the liquidity that's built here on the lower time frame. It is interesting. We're definitely building something around that level if you look here. We're definitely building something. Let's see what the dollar is doing here. There we go. Dollar is now net high. We're coming closer. Right there. Yeah, I think a flip is coming. There is a chance here. Even within the range. So I'm looking on the lower time frame a little bit. For gold in this case. DJ, we keep a close eye on it. Are we gonna enter in the flip potentially? Yeah. Yeah, I'm looking at a nice level to look from right here because we have a level within that range. It's like the 1908. Let's see. Feeling like Jimmy, I give you this Johnson. Know you like filming that content. All in your bank and I never pull out. I just like making deposits. Yeah, you keep it natural. Stay in your bag like you wearing satchels. Hey, baby, you a godsend, just missing the sandals. But still, you ain't missing much. Put your hands on my back, just a different touch. Put your ass on my plate, I don't skip the lunch. I don't skip the brunch, not the dinner neither. And we hella close, not a centimeter. Getting in between it, so you two turned up. Never turn down though, when it's big energy, when I come around though. So, don't ever switch. Know you've been looking, won't find it like this. Know you've been looking for a nigga that handle them curves. I'm Jimmy Johnson with this. Okay. Yeah, I think I'm looking at the EU, but yeah, indeed we're coming down right now, but I'm not there yet completely because of the dollar as well here. Look at the dollar already. We're now in that zone. I would not be surprised if the dollar decides to make a move here to the downside, or at least react here. But who knows? We'll find out in a second here. If he smashes through it, then gold potentially can just look for low targets. Lorenzo, is the euro affecting the GBP today as it struggles with the yen? Well, you can look at the currency index meter. You have the currency strength meter as well. Okay, just you can look at it right here and see what's going on. The euro is still extremely strong. The yen is definitely coming up stronger than yesterday. Yesterday it was all the way down, and the British pound is definitely declining here. So yeah, that is definitely the case here. It's interesting that the euro and the yen and the dollar are both looking quite strong right now. You don't see this that often. Yeah, you don't see this as often in general. It is quite interesting. It is quite interesting. Yeah. Yeah, potential buys here already. You know, potential buys above the 1908 if you really do decide to get rejected here for the dollar. So I want to bring in this level here. Just because look at the liquidity we've been building. And just in general, coming back into that range, the dollar have to be rejected. If not, of course there's no confirmation. Let's see how we develop. But the 1905, there is still possibility here if the dollar breaks the highs. Why buy above the liquidity? Well, if that's the case, you can come into that zone and then maybe look for the continuation down. And if the dollar gets rejected strong, we might see the continuation up towards this level here. Or you want to wait until it's all the way there, which is like a stronger confirmation. I would say this is a riskier buy, but this one right here is definitely something that you want to look for. But when it gets liquidity at gold, would it be sell? There is potential, unless if the dollar indeed decides to flip. But so far, it seems like we're just gonna break through it. So I think we're still looking at sell. So keep in mind, like we said in our buys in general here. Let's see how we develop here. Lorenzo, are you still swing holding your gold buys? No. If closes above liquidity, then buy, but if rejects after liquidity, then sell. Yeah, exactly. I'm telling you, like the Usd has a lot of potential for us today. A lot of potential for here. Later today here. Just saying. I think if you get rejected and we break below, I will be very interested in selling below here. So far, dollar strong. So far, dollar just looking for the continuation up. So that would include then the gold just continue moving further down. It's a good level to hold and to take consideration due to the fact that it was also the 50% right there. But so far, we're smashing straight through it. Yeah, love it. Love the Usd for later today. Really love it. If you can see a closure below, I'll be happy. Right below that level. 33,900. Definitely be interested in it. Japanese yen is finally making moves here. Let's give us that confirmation. We have... yeah, 6,911. We need to break close there. Probably GJ is tanking right now. Yeah, GJ is tanking. While we look at the Dow Jones, the Usd is a trade setup that potentially will trade as well. Usd, gold, and GJ. Is this the moment for the end? Are we finally gonna make some moves? GJ close below. We had a 1 hour closure right now. The New York is open. Let's go. Let's see what they want to do here with the dollar. So far, interesting. So far getting rejected here. We had that liquidity built for gold. Look what gold is doing. This looks like we're doing something here. We're planning to come up here. Very interesting. Let's see how we develop here. It's not close below the wick. It is. It is. No, it's not about the wick. It's about the body here. We're looking specifically at the bodies right there of these levels right here. We have this one. We have this one. We just wick below it and it came up immediately. Now you see it coming down. The yen is finally coming up. Finally. We're seeing something happening here. Lorenzo, why can't I see the voice messages on Discord from you? I don't know. Maybe update Discord. Okay. Okay, the reason why we didn't enter straight away is because, again, what tends to happen a lot is that we see that we are coming up right now. And then the last couple minutes of that closure, you see it coming down. And you see that you immediately start seeing the selling pressure coming down. And therefore it fakes out and it comes back up again. So I want to see at least one body closure. And then based on the next hour, I can look for the continuation here to the downside. Because if you look at and zoom out in general, there is so much downside potential in general that I think that's the most important part to take consideration here. If you look at this overall range, look at where we're at and what the potential is. So I entered straight away as soon as there was a top wick. Okay, that's fine. If you want to wait for that that zone, then you could secure yourself right there. I do want to see a closure here. Every single time we have seen this, we have been flipping. So I want to make sure we close above it. Gold trapping. Yeah, let's see how we develop here. I'm actually very excited for the USD today. I'm just saying. I do believe we're going to find a lot of potential there. Is supply and demand the best strategy? Not particularly, but I do believe that supply and demand is a great indicator for, for just understanding who's in control. Definitely. Let's remove some noise for now. Let's look at these particular levels. Can you tell us why to buy gold above lower line? I'm not sure about buying gold above the lower line. I'm more thinking about selling it if you break it. ICT is best as of RR, yes. For sure. I have seen some potential entries though. When you look at the 30-minute after the top wick, he entered with a very tight stop loss as well because the wick is not that small. You never come back to that wick. I mean, that's pretty ridiculous as well sometimes. But yeah. Order block strategies are usually, or imbalance strategies are usually very, very tight. Hi Lorenzo, what do you think about buying the strength, selling weakness, or we can say chasing price, especially in gold when it keeps pushing, unlike currency pairs, more related. Yeah, exactly. That's what we're doing. Exactly. And look at this, guys. Look at this. There we go. That's exactly what I mean. So what is DJ doing? Probably pushing back up. There we go. Yeah. So there was a nice closure and everything here, but the only real rule was that the Japanese yen basket, like we said at the beginning, guys, had to close above here, right? If we see a body closure above here, it was a no-brainer. It was a direct trade to the downside. But again, every single time you get rejected and you get pushed down here. Every single time. So be aware of that. And then it should be good. You wait for the closure above here, and that helped us so many times as well. The correlations right here. So yeah, we might see it now pushing back up again if the Japanese yen decides to keep falling, pushing back down right now because of that. Just playing with us one more time here. The body closure was the key difference maker, or the actual game changer right there. Okay, dollar broke above that crucial level. So yeah, so far we are looking at continuation to the downside for gold. Hey, from Bulgaria, nice. Never been there though. I've never been in Bulgaria, unfortunately. Actually, Eastern Europe are one of the most beautiful countries. Or have one of the most beautiful countries. I know for sure that that's a fact. I've been Hungary, Poland. Austria, I've been in Austria. I've been in Spain. I've never been in Albania. Where in Poland were you? Krakow. Visit Croatia. I've been in Croatia. I've been in New Zealand. I've never been in South Africa, unfortunately. Never been in Iraq. Let's see. Saudi Arabia, I've been. Italy, I've been. Syria, never. India, never. Morocco, never, unfortunately. Afghanistan, never. Philippines, also never. Man, there's so much more. London, of course. Brazil, I've never been even. France, Sweden, yes. Amsterdam, of course. Egypt, yeah. Ireland, never. Scotland, Yes. Sydney, yes. Amazing. Yeah, there's so much more to discover, man. So much more to discover. I could be traveling right now, but, you know, we're grinding. We're in a grinding phase. Okay, dollar pushing pretty significant here. I'm actually quite impressed how well gold is holding here. Look at gold and look at the dollar pushing. Significant difference. So yeah, we might be pushing up here. The moment the good dollar comes down, we might be pushing hard here for a second. So let's see. And look at GJ. The same old trick. The yen basket would have prevented you from getting trapped. Absolutely. What's the easiest way to spot liquidity? Well, you have trendline liquidity, you have equal highs, equal lows. You have consolidation ranges that are very clean. Everything that's too clean and too clear is usually viewed, in my opinion, as liquidity. When it's just too precise. JPY so tricky. I always lose. Yeah, because you have to be careful with the JPY. You cannot impulsively enter positions. That's out of my personal experience the case here. They trap you all the time, so you need to wait for the closure. And again, same old, same old. We had this 6 times before, or 5 times before. 1, 2, 3, 4, 5. And now again, the 6th time, we're seeing the same thing happening. Where we came up, we had that higher high, which was amazing. And then after that, we didn't close. And if you don't close there, don't try. Just don't try. Are you in a trade already or still waiting? Still waiting. Still waiting. Still waiting. Yeah. Yesterday it took a long time, but I mean, at least we got a beautiful trade. I think that what matters the most. Patience wins here. So, yeah, it's literally, you know, the market decides. The market decides what we're gonna do here. The market decides what we're gonna do. Going to get crazy in an hour with Powell, Bailey, and Lagarde all speaking at the same time. Yeah, I think we're going to see something happening here. I think we're preparing for that. GJ looks better for a buy. Yeah, if that's the case, then yeah, we have to wait for this level here. The 183. 183.1. Yeah, the dollar is absolutely going nuts, and while gold is actually not moving at all. So usually when that happens, you have to be very careful. You have to be very careful. That means that they're, holding the price up for a significant move later on today. So be careful. What do you think the New York session will be like? I think it's going to be very slow. Until 9 a.m. 9 a.m. EST, so like in 45 minutes. That's what I think. I think we're going to see some ranging happening here now. So I'm actually much more confident with, and we're going to hold this one for now. Buys above here just due to the volatility here. If you see something happening and the timing is correctly, we might enter earlier, but yeah. It's definitely the level to look out for. When will you be able to answer yourself that you're successful in trading? Yeah, you need a lot of data, man. A lot of data. A lot of data. Isn't it that gold is very bullish? Well, not particularly. If you look on the weekly, daily, 4 hour, 1 hour, we're looking quite bearish still. On all time frames. But on the lower time frame, we started to build that series, you know, that series liquidity here to the upside right now. If you do close a break above the 1912, then you know we might see a strong continuation here. So yeah, let's see. We're gonna see a lot more volume coming in very, very soon here. Same for the indices, by the way. The way we came up here, now tapping into that zone, we are at a very, very interesting range here. I would prefer to see it coming down and breaking below. I would definitely love to see that. Much more than continuation to the upside. Absolutely crazy. Dollar right now is now filling up that gap, or has filled up that gap here. So hey, if you get rejected at this zone, let's go to low time frame. And you start actually coming down here. Gold's gonna come up for sure. Gold is gonna react. Gold didn't react when we came up. Is it gonna react when we come down with the dollar though? That's the question right now. That would be a great confirmation for us to see, okay, maybe this is what gold, you know, the true essence of gold is going to be right there. Waiting for the dollar to break down and then just making a massive move to the upside. But for now, I'm overall leaning more towards the bearish side until proven otherwise. Yeah. Yeah, dollar is now a crucial point. So let's see how gold reacts here. Yeah, let's see if we can get the same potential entry as yesterday and just continue our journey here. GJ is looking good for a sell. It's doing pullback right now. Yeah, the yen needs to close above it. Okay. Dollar is still pushing. We are now coming closer and closer to that low. We have broken that initial low here. Not the low here. So we could easily see the continuation to the upside. And therefore automatically looking at the continuation to the downside here. Can you stream the news? Yeah, if let's see what's happening and let's see how gold reacts. But yeah, we can see potentially what's happening with the Uncle Jerome here. As long as we have a very close eye on gold and the US30. The yen is trying, but every single time when we get there, it just does the same exact thing, right? So you have to wait for these closures. You have to wait for these closures. It's absolutely crazy. Let me see what's happening right now in GJ, because GJ keeps doing the same thing over and over and over again. Coming down, trapping people, coming back up. Coming down, trapping people, coming back up. I'm very curious to see, when I look at my Facebook right now, what is the current status here? How many positions are held? And what's the sentiment like? Because yeah, I'm very, very curious right now. Gold is still in that range, so nothing yet here. Let's see what we have. Okay, GJ. Wow. Wow. GJ is 85% short right now. All right. 85% short. Retail's 85% short, 15% long at this particular moment. Think about that. 85% short. Okay. That's significant. That's absolutely significant here. Let's see what gold is doing. Gold. Where are we? Is 76% long. 76% long right here. $76 long. Wow. Interesting data in general here, right? Very interesting data to look at. GJ is crazy. 85% is short right now. So I get why they're trapping so many people. That's that's for sure. That's for sure. That's for sure. We're already above that level. Wow. Okay. Yeah, I'm still bearish on gold, to be honest. Even though that the majority now is actually long in gold at the particular moment. I am still bearish. I'm still bearish. I think that we can still look for the continuation to the downside. Even though that 76% right now with 6,175 lots out of 33,000 like 32,000 positions. That is significant. 76%, 24%. What website? My Facebook. Not interested in trading TJ? Absolutely, yeah. But not now. Not when the yen is getting rejected here. You could say that let's say the correlations are or like the actual executions is if you break out of this initial range here. The 1912 is a really nice clean area to break above, and you know, a strong buy above the 1917. Of course, looking for the continuation to the 1930, 1921, 2, 24, 30, and so on. But yeah, anything below here and below the 1903 is, in my opinion, also a free fall. You know, maybe the 1900 ranging around psychological level here, and then after that it's just coming down. In terms of GJ, should I buy if Chuck made? Well, I'm looking potentially for more of a buy above the following level, which is the 183.1. Like above here. You know, back into that range, and yeah, just back in that bigger range. The end target is 185. If we really come up again. Hey, we're starting to indeed look a little bit weaker, but overall, as long as the yen is still not closing a body above it, no interest in looking for the continuation here. So yeah. Why wait 1 hour candle, not 15 minutes? Yeah, no particular reason. Like, you have also the 30-minute here. The moment we broke it, it was around the 1 hour. We almost closed to 1 hour in general when we broke it. So yeah, that's the main reason. Already almost at 400 likes. That's absolutely nuts for the first hour and a half here. Thank you. Wow. That is nuts. That is nuts. All right, we're coming down. We're coming down. Dollar keeps pushing. Quite heavily here. In the meanwhile, we could better trade USD. Yeah, let's just see indeed. Let's see, just have a quick sneak peek here while we're waiting for gold. Gold is coming down though. We are coming down right now at the moment. Can you explain the spreadsheet you have given for the time is your channel? Watch the video. Watch the video. I literally explain the whole spreadsheet there. Why don't you use any indicators? Price action is my indicator. Price action is all I need. Price action and the correlations. Yeah, some serious levels here. We're gonna face support soon though. We're gonna see reaction here. Look at the lower time frames. Okay. Yeah, gold's coming close already. How long are you gonna be live for? Well, yesterday we were live for 4 hours and 50 minutes, 45 minutes, almost 5 hours. It depends on the trade. Yesterday we had to wait 3.5 hours for the trade to come. It was worth it, but yeah. We are, sometimes the market let us wait a little bit longer than usual. It all depends. Back to Awana. Yeah, I heard they're coming closer to the reversal. Then I'm definitely gonna go back. Yeah. For now, it's just an analysis here. I like to use the chart. Look at that. 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 Wow. Nothing below. I think we came. Did we came back to that exact zone? Let me see. I think we did. I think we did. Ah, yes, we did. We did. We did. We came back down to that exact zone. Yeah. Okay. So we tapped into that zone. We held very well. Yeah. Let's just see. Anything below, anything above. That's the level for now. Let's remove some noise. We have still the 1917. That's of course a major level. And the daily is also a level right here that we should definitely pay very close attention to. But for the rest, yeah, there we go. Beautiful. Dollar looking strong though. Like dollar is looking like it's going on a major run here. Look on the daily. We flipped the previous candle. We are now above the candle before. The daily candle before that at 102.87. We're breaking serious levels right now for the dollar. The real test will be, of course, there. But yeah, let's see. Weekly for fair gap target for dollar. It was key yesterday. Was a good trade. A lot of patience after entering the trade was necessary as well. Yeah, absolutely. It was worth the wait. It was worth the wait. There's nothing better than waiting for a very long time and then executing your trade. And then just like, you know, it's still going into your direction. It made you, you know, worth everything in general. Worth the waiting, worth the patience. Not too impulsive. But yeah, let's see. Lorenzo, are you still Bitcoin long? No, we closed at 31,000. So we need to wait for a closure above here. So far, gold is holding support here. So it's not really coming down. It's holding support while actually the dollar is making serious moves right now. So be aware. Yeah, the yen is fooling us right there. So funny, every single time. Otherwise, we would have easily taken it short straight away for GJ right there. We are coming closer to a really nice next level right now for DJ Joe. So if the yen decides to now close above it in the next 20 minutes and DJ closes below here, we might still see a trade happening. So the next 20 minutes are gonna be important. But yeah, we're gonna find out. I'm quickly gonna scroll to a couple of regular charts as well right now. Let's see what we have. G was actually absolutely getting smashed here. Yeah, I would look at this level right here. This one right there. The body. Yeah, right there. We're actually right now on the top of that level. I would not be surprised if the dollar now decides to hold back a little bit right now at the moment. After that massive reaction. So yeah. We are now coming back into that in this area right here. So yeah, let's see. Gold doesn't really care. Gold is just making, does whatever she wants today. That's for sure. Euro is very strong. Euro is overall very strong here. Yeah. Very, very strong. Nah, but look at the US30. Wait for the market to open up here, the New York Stock Exchange to open up here, and let's look at the US30. It's gonna be worth the wait here. Definitely. When you look at the US30 here, no, it is starting to look very good. We're also indeed holding above this area of demand right now. I think this is helping a little bit. US30. Oh man, if the US30 close below, yeah. Looking for the short continuation indeed. So far with gold, we have to be patient. Unless we suddenly flip strong and we break above this level and we just continue a journey, different layer. But the US30 is coming closer, and we have 15 minutes. We have a candle closure right there. So anything below could give us some beautiful continuation here. Yeah, anything below could give us a short right there. Okay. What a strong level for the yen. Look at that, guys. Anything above it is such a strong sign. Because we're constantly getting rejected right here. It's the only reason why I'm careful with GJ right now at the moment. Especially because of that level right there. Yeah, I like the US30. Let's go. Let's continue here. Dollar index almost up through that zone. Yeah, we are there. We are indeed still pushing. And gold is also pushing, right? That means only one thing. I think we're going to see something very interesting happening during the during this event. And I think this is also the main reason why we're seeing that happening right now. There says GJ buys. Okay. We are now in a nice zone. The yen, if you decide to not close above it, yeah, then yeah, we will see in 12 minutes. But look at the US30 right now at the moment. Keep in mind, there is no top wick though. Let me look at the other chart real quick, just to clarify. No top wick above that level. Like no wick, right? Zero. Yeah, nothing. Okay. Not on the 1 hour, not on the 2 hour. When does the 3 hour close in 11 minutes? Okay. Okay. What do you think of the Forex LNG closing in 2026? I heard it a lot. A lot of people are talking about it. I mean, there is possibilities for sure. But there's always something to trade. So I'm not really that concerned. You can definitely see that we're waiting here. I can already see this right now. We're waiting for this to happen. Tomorrow we have the GDP, all right, Q1, so that's important. Initial jobless claims, important. Pending home sales, okay? So many gold traps today. Yeah, there is definitely something going on right now at the moment. And definitely gold is not really listening to the dollar. So this just proves that, you know, you're going to see potentially a major move in the next 30 minutes. So we're literally waiting for that move to happen. We are coming closer and closer. We are now indeed getting pushed back a little bit already at the 19.8. But I think this Jerome thing is going to be so interesting. And the fact that we're already making a bit massive move before is only making it more interesting. Unfortunately, no top wick on the US30. Do you think the dollar is heading for Friday's highs? I think that the dollar itself, if you look at the overall structure right now, you look at the continuation, it's just gonna retest again that same high where we got rejected from previously, which is the 103. Which is right there. If you look at the top, it's right in this zone. I think there is a possibility we come back towards this level. And that level is at 103.1. So we still have some room here. Definitely some room. The yen is now, yeah, we're getting somewhere. We're getting there. What is the correlation to the US30 and the dollar and index and the US30 and gold? There's not always that much of a correlation between the US30 and gold. It's not as strong as between the US30 and the VIX or the US30 and the dollar index. They're all indirectly correlated with each other, of course. but it tends to be beneficial for the US30, for both the US30 and gold to go up when the dollar goes down. That's for sure. But in the end, there are a couple other variables you should take into consideration. You have oil, it's one layer. You have VIX is another layer. A couple of other variables as well. It's unfortunate that the US30 doesn't have a top wick on the 1 hour. Not on the 2 hour. Okay. Alright, gold flipping quite significant here. Look at that move. There we go. Now the volatility will come in. Around 9. Dollar just keeps pushing and pushing and pushing and pushing right here, right now at the moment. Wow. Look at that. The volume coming in. Nick, hope you're doing well, brother. Dollar is making serious moves here. The yen is pushing, facing so much resistance there. It's absolutely crazy. 5 minutes left. What do you think about prop firms? I think it's good. I think it's great. It's a great add-on. And I think the rules are getting better. I think a lot of prop firms understand what the rules are and what is like possible. The competition is getting more fierce, so therefore, automatically, these prop firms are trying to provide them with better rules. So provide you as a trader with better rules. So I think it's only going to get better for the trader over time because of that, because of the competition. They need to find ways to get people to attract people to their prop firm. That's how they run their business. So if that's like beautiful, better, much organized, more structured rules that are much easier for traders, it might be a good start. Okay, the yen is making serious gains now. So okay. Today could be catastrophic. Well, yeah, we're gonna find out. We're gonna see right now when Uncle Jerome starts here. Let's see if he's actually going live. Let me confirm this real quick. That's Jerome Paul live today. Yeah. Yeah, absolutely. Okay, the ECB form. Okay, there we go again. It's the same old, same old. Yeah, we'll find it. We'll find it. But it's important. Absolutely. Massive crash is good with me. I was looking back to my truck up until I'm out of fuel. What do you think of the crypto market will react after the speech of Powell? Good question. I need to look at crypto and see what's happening there. But with the dollar coming up that strong, I think, you know, we're probably coming down right now. Why is the speech important? The speech is important because they're going to talk, or they're going to look for little hints regards to the monetary policy. So that's kind of what we're looking for, what we're waiting for in general. That potential speech, that's going to potentially give us the implications and stuff of, you know, new interest rate hikes and so on and so on, which they already kind of, you know, agreed on, but potentially not as strong anymore. So like, you know, maybe 10 basis points or something in that matter. But if they still decide to do 25, then hey, that's going to be a major run for the dollar again. Crazy today, gold. Yeah, yesterday's trade was amazing, but for now, I think that in order to remain, you know, look for the same trajectory here, I think a closure below the 1903 will give us a lot more room to come down quite quickly. Anything above this level where we are now, like the 1905, I think this is still a, it's an important level where we can definitely look for a trade, but it's just, you're gonna still see a lot of support here. Look at DJ. Look at the basket. On the verge right now. Imran says, can we use the FRVP here also because gold is sitting exactly at the point of control from the range we look at? So which particular time frame you look at? And which range are you talking about right now? You're talking about this range or the previous range on the higher time frame? What does the no-wick candle indicates us that, and I've seen it so many times happening, that they come up to fill up the liquidity there to then move price further down again. So you want to see that you want to see that wick for sure. You want to see the selling pressure. I mean, every single time when you seriously start coming down, you see these serious wicks getting created. You want to look for that continuation. And that shape of that particular candle right there. Okay, the yen is finally doing better. Still no closure. So again, the next level is at 182.236. What do you see more valuable in trading ICT concepts, support or resistance? Both. Just understanding both is perfect. I don't think there is one better than another. I just think that, you know, for example, we look at areas of supply are very important. Areas of demand are very important. Understanding gaps, understanding liquidity below. Like, understand all these concepts and trying to create your hybrid out of it. I do have so far better results with higher highs and higher, so break of structures, like, you know, breakouts in essence, like we did before in the 1 minute. Even that was just a breakout strategy while using, you know, supply and demand and everything for confluences and stuff, but not for actual execution of trades. So for price action, trade execution, I prefer breakouts, closures, rather than supply and demands, order blocks, and so on and so on. Unless it's on the higher time frame. I'm still in stall since yesterday, closed 75%, have 25% running still. So you entered from our trade yesterday at 17.7, something like that. What was your entry? Oh, beautiful, man. Beautiful. You're still in. Okay, great. And that's another layer. You can also keep 25% open and just let it run and see where it takes you. In this case, fantastic, bro. Amazing. That was really good. Really good. Yeah. It was a good break. It took a while, right? Yesterday, but we were still like on the verge of, you know, support resistance at the moment there when we were actually in that trade. But yeah, we were flipping for a long period of time. But in the end, like with that wick fill and that news that came out and everything in regards to that, eventually, yeah, we just saw and we witnessed that exact reaction right there. Right now. There we go. I think that was it, right? Yeah. Okay, I'm in trade right now. There we go. Yeah, and then it flips. So we have our entry right here. Yeah, 19. My stop was about the previous wick. Let's see where it was. So it was 17.7, yeah. Jonathan says, I nailed every swing yesterday. One of my best trading days. Beautiful. Amazing. Did you enter gold? No, this was yesterday. After 3.5 hours, we had to wait very long time before. But yeah. Okay, I think this is it. I think this is gonna be the video for today. I'm not sure. Yeah, this is gonna be the video. This is gonna be the speech of Jerome. I think this is gonna be a conversation with Uncle Jerome. The best uncle ever. We're gonna find out. We're gonna see. So once we have a reaction, we're gonna hear it popping up, and we wait for gold here. Snowfall, why is uncle? He's my uncle. Whoa, US dollar, Euro, GP, GPY speaking all at the same time. Yeah, this is all gonna be a talk about global monetary policies and so on and so on. So it's gonna be just a discussion. It's like a forum. And the dollar is reacting quite heavily right now. We're looking. Yeah, I'm just very curious to see how long this is gonna play out, because gold is not really coming down. That's why I'm so, moi about it for now. Wait, hey, let's see. We're coming and breaking. Wow. Look at that. Look at that reaction. Look at that reaction right now. That was a quick move. That was a quick move here. Smashed through it. What happened? Dollar. Yeah, dollar is just keep moving forward, right? It broke through it. Okay. Look at the dollar. Look at the strength of the dollar. Of course, gold had to react at some point here. Yeah, I mean, pay very close attention to gold right now. Okay, 17 minutes for closure. The yen is breaking above right now. Finally, we have waited for that for so long. But the yen can still really play with you, so be very careful. Why? Because of this zone. I've seen it so many times. We came up here. We stayed here for a long time. And then the last 5 minutes, boom, coming back down. So you want to see body closure. Until then, GJ is not interesting. GJ need to create a 1 hour closure. And that's in 47 minutes. So GJ is not interesting for now. Gold is though. Gold is interesting though. Gold is getting there. Yeah, absolutely interesting here. Okay. So gold finally broke through that level. I would love to see it coming down below the 1903. That's like a very strong sell below, in my opinion. If you can close below that level. Why? Because there is just so much more. We actually close below the body of that candle here. But yeah, let's see for now. No for sure buys at this particular moment. We came down 30 minutes. This is good enough. Wait for a closure. It's super important. Don't try to get into a breakout right now and like enter on a break. Wait for a closure and see how we move forward from there. Because this looks like an easy wick fill manipulation, liquidity grab based on how it's currently acting here. Use 30, definitely wait for the New York Stock Exchange to open up here. Keep in mind we have no top wick of the previous candle. We could be coming up still to fill up that wick. And I would love to see it before coming down. Creating our Bart Simpson right there. You know, looking for the continuation, the dump right here. Gold, look at that swipe right here. Wow. My VIX book still long. Let's see. Let's refresh it. Let's see what they're saying. Gold is 76% long. 76% long. Yeah. Yeah, absolutely. And they are all in a loss at the moment. On average. Crazy. Closures are so important, so key for us. Okay. I mean, anything below, it's just not appealing for us right now at the moment here. Okay. Any breakout strategy or whatever? No. Closures are key. Absolutely key. Okay. Yeah. Lorenzo, you are Italian. My father is Italian. I'm half Italian. That's a monster swipe right there, by the way. A monster swipe right now. Look at the dollar. Dollar is in that area of the month. Supply here, where we were talking about the 103. Facing a lot of resistance right now at the moment. What is your real name, bro? My real name is Lorenzo. I have nothing to hide here. Nothing to hide. Okay. Yeah, dollar is now in that zone. So yeah, you could expect here some resistance. So, I mean, this is a monster swipe for sure. Half Italian, half what? Dutch. Ooh, okay. I mean, yeah. Look at that. We had the liquidity built up there, for sure. Doesn't mean we can go long. Let's see. 1908.5. Now, let's keep this one gone for now. Let's see. This is not important yet. This is not important yet. Can we go long there? Let's see. Dollar creating a lower low internally. Is this what's going to happen? Let's go to 10 minute. Let's go to 30 minutes. Yeah, it's this break. It's this body break. If we come down, yeah, I think gold's gonna come up already much faster. Let's see. Let's observe it. But might see also taking a long above the 1908.6 rather than waiting for the 1912. Because this is like a serious move here. And we can go for the buy side liquidity above there. With a strong body closure like that, a next wick, and then again a new closure, yeah. I mean, yes, if the dollar indeed decides to break and flip here, after that rejection on the 15 minute, like we saw before, yeah, we might take a buy already. On the 15 minute. But what needs to happen is that the dollar needs to break below. The dollar needs to come and break that, swipe that low. In 9 minutes, or 10 minutes, sorry. When this candle closes below that previous body. Which is at 102.886. We need to actually flip that previous candle. Close below it. Create a top wick. Create a bottom wick. Top wick, and then push down and flip that previous closure. There are a couple more confluences that we need. And then, of course, gold needs to break above and close above the 1908.6. I think this is a good level already. Speeds coming soon, save the trend. I'm not really that worried about the speeds too much, because I know how it goes. It's just going to be a lot of raffling, a lot of formal statements. You know, it's just the pre-reaction to the actual event is always interesting, which is actually happening now. We're very soon. We're seeing it already happening, but the New York Stock Exchange is going to open up. This could potentially give us a little more volatility, but that's pretty much it. So first 15 minutes, maybe. Let's see. But the 1908 is an interesting level if the dollar indeed decides to do what we were just talking about here. And that is flip.
I'm sorry for what I have put you through. I still have you on my mind. My focus been
Of course, like the 1912 is like a safer level to look at. Much safer level. But again, this 15-minute zone is interesting. Let's see. 7 minutes for a closure. Use 30, yeah. So the New York Stock Exchange is going to open up here. In 8 minutes. Okay, right back, guys. Give me 1 minute. Yes. Look at that. Wow. Okay. The 1908.6 potential still, yeah, has potential. Okay. Of course, we have the 1912, the 1912 right there, which is of course a high likely scenario, like for a strong buyer above it, and especially above. Like we can take it all the way up to like the 1917, but in this case, I think that with the candle like that and a closure like this here, you know, with the dollar now already moving up so quickly, in combination with the dollar now flipping potentially here, we have 4 more minutes left. We need to see that breakdown, okay? We need to see that breakdown right here. We need to see that level getting broken, and we need to see body closure below the 102.886. And yeah, I might take a long earlier than the 1912. Speech is starting also quite soon. $520 likes, man. Wow. Are we able to go to the 700 today? That would be absolutely amazing. That's absolutely crazy. That's a lot for, you know, the first like 2 hours. That's a lot of likes. Thank you. Wow. Okay, let's keep a close eye on the flip. Are we going to flip here? Use 30. New York Stock Exchange opening up in 3 minutes. GJ is indeed, flip is indeed coming down as well. So it's a hectic day, but it's very interesting. Very interesting. I think a lot of guys got trapped here. Again, people get trapped all the time. They enter straight away on a breakout, and it takes them, swipes them. And, you know, and then when we miss out on the breakout, then it's like, oh, why didn't you take that breakout? Well, how many more times have we seen this happening? How many more times have we seen this happening? Confirm it in the chat, please. So you understand why we wait for closures. Let's see. Very strong. 1 minute left. Dollar is indeed flipping. Dollar is flipping. Look at that. We need to see a body closure below it. 1 minute left. And then that next wick, like we said, it needs to come up first and then come down again. Let's see. I can't believe I don't have wireless headphones. All right. 40 seconds. Okay. Okay. Of course, 1912 is like the ultimate scenario here, but I think I'm gonna go half risk on this one, if this is the scenario. But I do want to take it with a liquidity grab like this here. The dollar already moving up that strong. Dollar right now closing below. We did close below. Now we want to see the top wick and that rejection. We need to see the top wick right now. Top wick rejection. overextended coming back down to this level, which is gonna push gold up, then we want to be in already. Closure has been confirmed. I didn't enter yet. Went way too fast for me. I didn't enter yet. Dollar wick is confirmed. This is great. Let's push up a little bit more. So we can give us that push down for gold. Yeah, look at that already. Wow. Wow. Dollar index, get rejected at the area of supply. Now breaking below that level. Coming down, breaking below. Top wick is created. Now we need to push down. Now we need to flip here. That's the flip you need. There we go. Yeah, man, this is it. I didn't catch it. I wanted to see a little bit more of a stronger wick. I didn't catch it here. I didn't catch it. Oh. Very unfortunate. I'm gonna buy above the 1912 if we keep going up here. Oh my god, man. Oh my god. Wow. Okay, beautiful though. I told you, man. Wow, look at look at that here. Yeah. Oh man. Look at that one. Wow. Okay. Okay, gold. So for now, either is for me, for my personal entry, it's gonna be the 1912 here. Or we create a stronger body wick and we continue to close above it. Overall, this is exactly what we wanted to see for the dollar. This is actually perfect. So first of all, let me see who's in gold right now. Let me know in the chat. Who's in gold right now? Oh, a lot of people are in gold. Look how many people are in gold. Oh, much more than I thought here. Okay, good. Yeah, we're seeing serious momentum right now. Serious reaction here. That's exactly what we wanted to see. That flip was perfect. That's why you look at the dollar. The dollar gives you so much information. So much information. When you look at gold. It is absolutely incredible. It's not really about the US30 though, right? Because the dollar was coming down, US30 was coming down. The VIX is important for the US30. If you look at the VIX right here. Okay, this is very unusual. This is very unusual. I've not seen that before. I'm gonna go a little bit deeper into it in a second here. Has to do for sure with the news here. With everything that's happening in a second. A lot of manipulation there, okay? Secure yourself and break even if you entered. And yeah, if you could take some profits, you take some profits here. If you continue up, our next zone is above the 1912. That's going to be a no-brainer. That's going to be a no-brainer trade setup in general. John says closed at the top full position. Oh, beautiful. Yeah, the 19.8.6 was great. That was very good, very good. The next buy will be at 1912. If you break that too. This was a stop hunt. We will see more downside, I guess. Yeah, let's see about the 1912. The 1912 is going to determine a lot here. Okay. We're seeing something happening. Or I hear something. We're going to start soon. We're going to start soon. Volatility was kicking in before. Tremendously.
Hello and welcome back to the final panel of our conference.
Ooh.
Inflation is lingering.
Ooh.
The European Central Bank, the Federal Reserve, and the Bank of England have all raised rates. Even the Bank of Japan.
The Bank of Japan is here.
Is considering unraveling its decades-long ultra-loose monetary policy. The question now is how long will policies have to stay in restrictive territory to bring inflation back to institutions' 2% goals? And is it possible to do so without creating a recession? Ladies and gentlemen,
great questions.
Members of our next panel will bear a great deal of responsibility for bringing inflation back down to 2, and not only that, but keeping it there. Sarah Eisen, the closing bell anchor at CNBC, will be moderating this session. Sarah, over to you.
Thank you so much, Claire. And let me just say, as a business and financial journalist who started out in foreign exchange, this is pretty much as good as it gets. So thank you for having me talking to the big four today. And what I love,
started in Forex,
because it's always fun.
All right, so
when everybody's in,
if you're break even, this is the right moment to do so, in my opinion.
Different speeds, and maybe disagreeing, if you dare to do so today. So thank you all. President Lagarde, I'll start with you.
Let's see how big this move was.
On the view from Europe, I'm curious
30 pips,
where all of you are in terms of this policy path. We've certainly seen a fight against inflation. You've been very clear that there's more work to do. How much more?
Thank you so much, Sarah. It's very nice having you in this closing moment. And I'll take this opportunity to thank all the contributors, those who have prepared papers, those who have worked with the presenters, and all the panel members. It's been really, really a rich conference, and I want to thank you. So, as far as the European Central Bank is concerned and the Eurosystem,
there we go. Better.
A lot of ground. We have increased our interest rates by no less than 400 basis points in very short.
Okay, should be out and break even.
A year, and we still have ground to cover. And I think that, as I said earlier on, we are data dependent. We will decide on a meeting by meeting basis, but we know that we have ground to cover. And if our baseline stands, then we also know that we will very likely hike again in July.
What about September?
That I will not tell you, and for a very simple reason. that I just mentioned, we are data dependent. We'll decide meeting by meeting.
A lot of manipulation here.
You know, we'll tell you, for the September meeting, we will have received a lot more data, information, survey results, and it's
real quick, wait for the next 30-minute candle right now. So if you entered here on that trade, you could have taken a nice little short trade here. It would have been a quick break-even position. Right now you're flipping. The next 20 minutes determine where we close. I hope we close that either below the 1905.8 again. That's the most important part here. If you now decide to take this as a liquidity swipe to the top side, we came down, took out the lows, we took out the highs, and now we're going for that actual move here. We'll be completely fine with this. However, the close needs to be on either below the 1905.8 or above the, in my opinion right now, the 1912 to reduce the volatility here. So 1912 or 1905, if not 1905, 1903.8. So one of these levels we have highlighted here.
Point when we looked at the data, because we too are being driven by evidence at the moment, the cumulative data, both particularly on the labour market and on the inflation release we had, which to us showed clear signs of persistence, caused us to conclude that we had to make really quite a strong move at that point. It was justified. My own view on that was, if we were really of the view that we were going to do 25 and then we were really sort of baked in for another 25 based on the evidence we'd seen, it was better to do the 50. And then we will, as Christine said, we will be evidence driven. So we will wait for the next set of evidence for our next meeting, which to Christine's point again, will also be one where we will have a full forecast.
Have you received a lot of flack for the move?
Well, I think at the moment I can understand why there are critics of us and central banks. We have a job to do. I'm very clear that our job, all of us are very clear, I think our job is to return inflation to target, and we will do what is necessary. I understand the concerns that go with that, but I'm afraid I always have to say that it is a worse outcome if we don't get inflation back to target.
Something I know you've all been saying. Chair Powell, you've said it many times, and yet you paused, but you're not calling it a pause, and you're not calling it a skip. So what are we calling it?
Well, first of all, Sarah, thank you, and Christine, thanks for hosting us here in Sintra.
Let's read from the script.
What we're calling it is maintaining the level of the federal funds rate at its current level for this meeting. Thank you, thank you. And we did that, if you think about it, we've raised the federal funds rate by 500 basis points since a little more than a year ago. And we think, so we've come a long way. We also think that there's more tightening power coming through. Really, policy hasn't been restrictive for very long.
Quite heavily here.
We started at negative real interest rates, and we've now moved up to where we actually are in restrictive territory, but we haven't been there very long. So we believe there's more restriction coming. And what's really driving it, to Andrew's point and Christine's as well, is very strong labor market. We've got a labor market that, where jobs are being created.
Strong labor market.
Strong wage gains.
We still want to get back to the 2%.
Incomes and driving spending, which is driving more demand and continuing to drive labor market. So the
labor market is super tight.
Is really pulling the economy. And my colleagues and I, as you will know, wrote down in our SEP 2 more additional rate hikes. The median was quite a strong majority, actually wanted 2 or more rate hikes. And the reason for that was, if you look at the data over the last quarter, what you see is stronger than expected growth, a tighter than expected labor market, and higher than expected inflation.
A lot of volatility right now.
Policy is restrictive.
Okay, we broke it.
It may not be restrictive enough, and it has not been restrictive for long enough.
So I don't get why you didn't raise rates at the last meeting, especially I think it was a surprise that it was a unanimous decision to hold rates steady when you said a majority think that they still need to go farther on raising rates.
It's really just as you
Cover
get
below
closer
it.
and closer to the goal. What we're aiming for is a stance of policy that's sufficiently restrictive to bring inflation down to 2% over time. As you get closer to that, you get closer to the place where the risks become more in balance. So, we did 4 75 basis point hikes in a row starting in June of last year. In December, we moved down to 50. Then we did 3 consecutive 25 basis point hikes. So this is really just a continuation. We're going to move the decisions a little bit, make them with a little bit more time in between them, in an effort to get more information from the data to see how much restraint is really coming from these, through the pipeline from rate hikes that we only made now, in many cases, 6, 8, 9 months ago. So that's why we did it.
So maybe in every other meeting hike.
We've not decided that. So no, the only thing we decided was not to raise rates at the June meeting. We have not made a decision to go to that. It may work out that way.
Okay.
It may not work out that way,
Important
but I
stuff,
wouldn't
though.
take,
Very important.
moving at consecutive meetings off the table at all.
I'm trying.
Dollar
Governor
is
Ueda,
literally where it was before when we started.
First of all, it's great to talk to you. We haven't heard much from you outside of your policy meetings in Japan. I think the world wants to know why you're the global outlier here. You have decided to maintain
Buy or sell gold depends on the
your easier
closure.
monetary policy
15
in the
more
face of
minutes.
rising inflation. Why?
So a simple answer would be, although the headline rate of inflation is above 3%, which is well above the 2% inflation.
You want to close below this level right now, 903.
Underlying inflation is still a bit lower than 2%. That's why we are keeping policy unchanged at the moment.
Even though we've seen measures, including core, right, higher than the 2%
the usual
level.
core is also above 2%. But let's say, let's look at the rate of increase in wages, which is an important determinant of underlying inflation. It has risen, but is now running at around 2%. Now, if you want a 2%
Look at gold. A lot of volume.
wage inflation that's consistent
13
with that
minutes left.
would be slightly or well above 2% if you assume productivity growth rate is positive. So there's still some distance to go, we think.
And as a result of your policy being different than all these policies of your colleagues, the yen has
Picture in
gotten very
picture. I
weak
don't know where to do it now.
and continues to weaken by the minute. Is it too weak?
Well, the yen is being influenced by many factors other than our monetary policy.
Let's see if it's possible. Indeed, that would be amazing.
We'll see. We monitor the situation very carefully.
Monitoring the situation
Yes.
for intervention purposes.
No, it's the jurisdiction of the Ministry of Finance. Decisions on intervention.
I know where to do it.
President Lagarde, how much would you like to see inflation moderate from these levels? Because we've already seen a nice moderation. For you to feel comfortable taking a pause or potentially going the other way.
Well, this is not what we're considering at the moment, okay? But if I look back at what we've covered, inflation was, I think the highest reading we had was 10.3. We are now at 6.1 headline. Core has moved a bit down, but we are really looking at both headlines, which is the measurement that we have agreed in our strategy that is visible for people, for the consumers.
You guys are legends. Thank you so much. Appreciate it.
And on that front, we are not seeing enough tangible evidence of the fact that underlying inflation.
That's next level.
Are stabilizing and moving down. So we're looking at as many measurements as we can because we want to be in sufficiently restrictive territory for long enough so that we are confident that we reach our 2% medium-term.
The volatility is absolutely insane.
Why is it so sticky, Governor Bailey?
Two levels, 1903 and 1912 here right now.
Well, let me distinguish headline and core for a moment. So with headline inflation,
it is
I do
crazy.
expect it to
Up and down, up and down.
markedly this year.
Wait for a closure in 10 minutes.
Some time. And a lot of that is to do with the fact that the unwind of energy measures in the UK is on a sort of somewhat longer track, so that we will see some quite sort of discrete sort of jumps down in headline inflation in the UK throughout the rest of this year. And indeed, actually, energy prices are now somewhat weaker anyway than we thought they would be even quite recently. So it's core that's the issue, just as Christine has said. Core is much stickier. I think I come back to the labour market again. We have a very, very robust labour market.
Oh man, that's actually beautiful. Let's see how we can.
One of the striking things about the UK is that the size of the labour force is smaller than it was at the outbreak of COVID. So we have had a shrinkage of the labour force. We're seeing some reversal of that now, but we're still not back to where we were pre-COVID. So that is causing the position in the labour market to be very tight. And I see this when I go around the country talking to firms, because what they say to me very frequently is that
Impressive.
their plan is to retain labor as much as they can, even in the event of a downturn, because they've been concerned and it's been difficult to recruit labor. So that's certainly taking place. So I would say there's a backdrop of a very tight labor market going on.
Is it Brexit related also?
I don't think Brexit is a part of that labour market story. I think a lot more of it is actually to do with, frankly, the response to COVID. I mean, we've seen people. UK is a little unusual in this respect. We saw people come out of the labour force during the COVID period. Other countries have tended to see that position reverse more quickly and more strongly than we've seen in the UK.
Governor Ueda, when it comes to the inflation path for you,
Dollar up or down?
Like to see it continue
Chad,
to rise
dollar up and
from
down.
here, right? What would it take for you to really strongly consider abandoning the yield curve control and negative rates?
So we have a forecast or a projection of inflation path that looks like it's going to go down for a while toward the end of this year on declines in import prices, and it's spilled over to domestic prices. And from there on, we are forecasting some increase in the rate of inflation into 24. But we are less confident about the second part. If we become reasonably sure that the second part is going to happen, that could be a good reason for a policy change.
If you see a steady increase.
If we are reasonably sure that the second part of the forecast is going to
But didn't you learn from these three that inflation turned out to be not transitory?
Excuse me?
I mean, wasn't one of the lessons from the last year that inflation wasn't transitory and that there are some elements in it, was not,
Yeah.
and that there are some elements of it that are sticking and proving difficult to fight?
Right. So the second part is the sticky part. But it's still, as I said, we think less than 2%. We hope to make sure that it's going to go up to 2%.
Chair Powell, we've seen some progress in the U.S. Certainly, if you look at the headline CPI from 9% down to 4%. I know you're focused on core, but what would make you feel
7 minutes.
feel better about it that you could remain on hold?
So the progress on headline inflation coming down is certainly welcome and ought to help keep inflation expectations anchored. But I think it actually helps to think about core inflation broken into three pieces. The first of which is goods inflation. And we've seen goods inflation coming down for 6 months now. And that's because supply chains are improving, the shortages are more or less gone, and also because consumption is moving back to services and away from goods. So that part of the story makes sense. Housing services is the next piece, and between that and goods, you have a little bit less than half of the total index. And you see now the new rents that are coming in are at lower increases or no increase, and so there's significant disinflation in the pipeline there, but it's going to take 12 months or 18 months to get there. The place where we haven't really seen much progress is in non-housing services, which is a little more than half of our core PCE inflation index, and that's hotel services, travel services, food service.
GJ is not moving.
Financial services, healthcare, those things. It's a generally very labor intensive. Some of it's quite cyclically sensitive, but some of it's not. The point is, that's where we're not seeing a lot of progress yet, and the reason is that, or one explanation for it is that labor costs are really the biggest factor by far in most parts of that sector, and so what we need to see, we've seen a lot of signs of softening in the labor market, but it's just kind of beginning. We need to see a better alignment of supply and demand in the labor market and see some more softening in labor market conditions so that inflationary pressures
undecisive for now.
Can also
completely undecisive.
Are you surprised that hasn't happened yet after 500 basis points of tightening already in a little over a year?
Yes, I think widely it's been surprising that inflation has been this persistent, but I think the bottom line is that policy hasn't been restrictive enough for long enough to start to see those effects. And the service sector is not especially interest rate sensitive, by the way, as opposed to, for example, the goods sector. So we wouldn't expect it to be the first to be affected, but we would ultimately expect, as demand softens and as the labor market conditions go more into balance between supply and demand, we would expect to see inflationary pressures subside in that sector as well.
Do you guys coordinate? Do you talk amongst yourselves?
Yeah, of course we do.
I mean, do you call before policy meetings?
Can I
Yeah,
just,
please.
I just want to follow up on what Jay said, because I think
Very volatile, very
exactly
undecisive
right.
for now.
And I think that
4 minutes.
This is what I call the catch-22 issue, where we have an expected catch down where manufacturing eventually will align, or services will align on manufacturing, and that would be the logical consequence of the lag time that it takes for services to align with manufacturing and to, see prices go down in that sector. The catch up is that of labor, because it is, as Jay said, labor intensive. It's generally relatively low productivity and low skilled jobs in those sectors, and also those jobs that are going to seek the catching up with pre-COVID times. And how that catch down, catch up will be resolved
Dollar
is going to be critically important.
Tend to be more weaker.
For where inflation is heading, because if we see inflation going down in that service,
But it's not there yet for sure. We still have some potential. So 3 minutes, 30 seconds for closure. Let's close below this level.
Then we would be in a relatively good place. But that is totally question mark for the moment.
DJ
Yeah,
holding.
so it raises the question, Chair Powell, about whether we need to see a much higher unemployment rate in the U.S., and you're all dealing with a tight labor market, to finally really break inflation.
So, that the way we think about that is that there seems to be a path still for labor market conditions to soften and for demand and supply to get back into balance without the kind of large job losses that have happened in many prior cycles. And the reason for that is the level of job openings that still exist in the labor market. So it's still set 1.7 job openings for every person who counts as unemployed. That has been coming down. Actually, the number of job openings has come down now by almost 2 million. And what you're seeing is wage pressures. They're still high, but
Dollar needs to close below.
You're seeing surveys
102.866.
of workers and businesses suggest that
More
the
bullish
labor
for
market
gold
is
then.
not as tight as it was a year or two ago. So you're seeing a job creation is beginning to come down. There are a number of indicia that would suggest that we're getting the softening that we need. We're getting it slower than we'd expected, but nonetheless it's happening. So it's still a possibility there. But it's so uncertain right now that in my view the least unlikely case is that we do find our way to better balance without a really severe downturn. I think there's a significant probability that there will be a downturn as well, though, but it's not to me the most likely case.
That's the hard landing scenario.
Or just this, I wasn't even thinking of hard landing. I was thinking of even a recession. To me, it's not the most likely case, but it's certainly possible, and of course, many forecasters do predict that.
Is Europe in recession, President Lagarde?
Good question.
I mean, we've seen 2 negative quarters of GDP. I don't know how you define
Great
it.
questions.
I think the first quarter of 23 was actually completely flat, wasn't negative. So technically, I think you could argue that we did not see a recession, but it's stagnant, to say the least. And the expectations for Q2, particularly in the industrial sector, if I look at PMI numbers.
Well, my family in the Netherlands would tell you something completely different.
Are not giving us great hope that there will be a strong recovery. We see a second half of 23 up from the first half, certainly, but moderate. We have a 0.9 forecast for the whole year.
Do you agree with Chair Powell? Do you think you can get away with this tightening cycle without dragging Europe into recession?
Our baseline does not include a recession, but it's part of the risk out there.
Are you willing to tolerate a recession?
Well, the interesting thing for us is that if you go back to last November, when we did a forecast, we were predicting quite
Dollar
a long,
getting
but
rejected
quite
there of
shallow
supply.
recession. And the economy, as I said earlier, has turned
This
out
high
to be
is
much
important.
more resilient so far. Now, I think
If we see this coming down,
point to a number
gold
of
has
things
to
that
break
underlie
above
that.
here.
One of the things I would point to is the fact that we've had a very sharp fall in energy prices in Europe. And that obviously has helped with the whole question of the terms of trade shock that we've been having. It's done quite a bit to reverse that terms of trade shock, and that feeds through into national income. So I'm not surprised that we've had this reversal in one sense. What was surprising, but actually very helpful, was that, of course, we did have this big fall in energy prices and a much better winter, frankly, than we thought we would have. So, yeah, we're going through this year now in a more resilient position than I expected. So we're not currently forecasting it, but obviously we have to watch it very carefully.
How's the Japanese economy faring? I mean, it's very exciting if you look at the Japanese stock market.
So this is important.
At a 30-decade high.
Real quick, dollar closed above that initial zone. So dollar closed above right there. That level didn't close below. We closed right in the middle here. We were supposed to close below, so we could easily be pushing down again a little bit here for...
What's happening fundamentally?
It's doing
gold.
very well. I mean,
There we go. So let's see.
apart from the contribution from in May, and this is stimulating consumption and investment. There's also green GX, DX related business fixed investment taking place. So investment is fairly strong at the moment. We think the economy is going to expand at slightly above potential for some time. But there's, of course, a lot of uncertainties going forward, including what may happen in Europe and the United States.
Yeah, dollar.
I asked if you guys coordinated or talked about monetary policy before. I mean, does that happen? Should it be more coordinated? Because you're all doing different things right now.
Well, I mean, I'll start. I mean, obviously what we don't do is say, what should we do, what should you do? Because we're all setting the monetary policy for our areas, and that's the law in all of our areas, actually, so we don't do that. But we do talk a lot, and I think it's important. I mean, it's important at all times, but it's particularly important in recent times at the moment because we're facing such big global shocks. I mean, we've got common shocks. They differ a little bit in terms of their impact and their effect, but there's some huge global events going on that are affecting all of us. So, I think it's, we do talk quite a lot and we see each other quite a bit because it's important we do that. And, we share wisdom on how we're sort of interpreting the things that are going on around us.
Yep. I guess we are in a flexible exchange rate world, so we do policies independently. But of course, we exchange information, which is very, very valuable.
Do you think that, Governor Ueda, do you think that they are over-tightening?
No.
No, you don't. You approve of the policy. You've had a very tight labor market for a long time in Japan, even before.
Oh, sorry, no sound. No,
COVID.
Yes.
super important.
Demographics.
Yeah.
It's working in a way.
What happened?
To tighten the labor market for quite a long while. And it's going to continue this way for a while.
I mean, the economic conversation, it gets into an interesting question, Chair Powell, where now we're wondering,
Close your buff.
easier to fight inflation last year when the economy was doing better, but now that we're seeing signs of softness and weakness in manufacturing, and you mentioned the labor market starting to cool off, about overdoing it and the risk of overdoing it. Do you wonder about that, or you're still just focused on inflation?
Let me say the U.S. economy has actually been quite resilient, and the data that we're still seeing, including since the last meeting, still is consistent with with an economy that's resilient and growing albeit at a modest pace. As I mentioned earlier, though, yes, there was no question. The first question was how fast should we go, and we went pretty fast, and we got to a level that we believe is restrictive. We're in restrictive territory. If you take the federal funds rate and you subtract some forward-looking measure of expected inflation, you'll get a significantly positive real rate, meaning we're probably in restrictive territory. So, and I think we have steadily slowed the pace of our moves, and it's appropriate to do so for one reason, because the more information we get, the better decisions we'll make. The risks of doing too much versus doing too little become more in balance. I wouldn't say they're in balance yet, but they're becoming closer to balance. I still believe and the committee clearly believes that there's more work to do, that there are more rate hikes that are likely to be appropriate, though.
So you think the risk is still of doing too little and not getting control of inflation?
Yes, and of course
But inflation expectations are, I don't have to tell you, very well anchored.
No, but the thing with the risks is that there may be social costs associated with restoring price stability. The social costs of failing to restore price stability will be higher in almost all likely cases. We've seen what that looks like, and it's just something that we have to do. It's the one of the principal things that society counts on us to accomplish, and I think we all feel committed to accomplishing it. It is of course a good thing that inflation expectations have remained anchored all this time, but our understanding
gold
of
pushing
inflation
through
expectations is not a precise one, and the longer inflation remains high, the more risk there is that inflation will become entrenched in the economy. So we have to, the passage of time is not our friend.
very choppy right now.
What about a higher inflation target? I know none of you want to talk about that, but on Wall Street, there's this idea that a lot of things are changing in our economy structurally. The onshoring of supply chains and chip plants and all of that is going to be expensive and could permanently create higher inflation rates. Couldn't it, President Lagarde?
Well, at this point in time, and given the fight that we lead against inflation, the yardsticks that there is, the strategy that we've agreed, the expectations that we have, and the inflation targeting, as it has been said, there is no way that any of us, I think, would consider changing the gatepost halfway or more than halfway through that journey. I think it's wonderful to have a forum like Sintra, which brings together academics and other than policymakers to actually consider those ideas and to explore them and to weigh the cost and benefit and all the rest of it. But at this point in time, I think we have to be as persistent as inflation is persistent, and we have to be resolute and decided and determined in.
If you're going to break above the 1912,
and not debate,
we might see a closure in the trade there to the upside.
As we are running that race.
But it does raise the question, Governor Bailey, about how far inflation will come down to.
It does, but let me reinforce what Christine said. What is the inflation target? It is the definition and practice of price stability. In our legislation, it is what price stability is taken to be. That is the 2% target. And I don't think anything has changed in terms of what we mean by price stability. And I think that's a very important point to start with. It's the anchor that we have to always maintain. Now, in terms of bringing it down, yes, I mean, we're facing, have faced and are facing the biggest challenge for a very long time. But we have to meet that challenge. I don't think it is the right thing to do to say, well, this is all a bit difficult, let's change the target. I really don't think that is the right thing to do. I think that would be a very bad thing to do. And I think, although I very much agree, as Christine was saying, that there are things we understand about inflation expectations and things we don't understand about inflation expectations. I think taking risks of that nature with inflation expectations, but also fundamentally changing what we mean by price stability when there's no good reason to do that, I think would just be the wrong thing.
How do you read, Governor Ueda, the inflation expectations? Because they've
Jan is getting rejected. GJ
Yes.
will be interesting
We've
very
been
shortly.
for a long time trapped in a zero inflation expectations equilibrium.
Gold
So we've
has
been
this
trying
trend.
very
If we
hard
break
to
out,
move this to a 2%
it's pretty straightforward.
2% expectations equilibrium. To do so, we had to de-anchor expectations from zero, raise inflation expectations, and in the future we will have to re-anchor them at 2%. This is a formidable task, and now we are seeing signs that inflation expectations are rising. But as I said, not to the extent that we are fully in the 2% inflation expectations equilibrium.
It also raises the question, you mentioned the labor market and some of the post-COVID.
To be honest, I actually hope we break above
how
here.
COVID has distorted the data and has made travel, for instance, so strong for so long. And I wonder, Chair Powell, how you look at the COVID impact on the economy and how it's changed the way you make forecasts and you think about what's happening right now.
Well, I think there are changes, and we don't know how persistent they will be. Certainly work from home, and you can see the effect on commercial real estate, particularly office real estate and the surrounding retail that it's suffering in many major cities. We don't know how long that will last. It feels like some part of that will be persistent and will last. You mentioned the data as well. We've I guess response rates to a lot of the data that we collect and other organizations collective, the response rates have gone down, and you're seeing a lot of volatility in some of these data series, more so, I would say, more so than we've seen historically. So the data are even a little bit foggier than they usually are. But we'll be, in terms of what the effects of COVID, it's going to have long-term effects on the economy. There may be loss of productivity. There's certainly been, for a generation of kids, some loss of education and training. I think it's hard to say how persistent all this will be.
What is your level of concern of commercial real estate, since you mentioned it in the U.S.?
It's something that we, of course, are watching carefully. The way it lays out is the large banks don't have large concentrations of commercial real estate, so that's a good place to start. A surprisingly large part of exposure to commercial real estate is in the banks that are under 100 billion. But there, the worry is more banks that have a high concentration, and they're relatively few. So it's something that we're carefully monitoring. Bank supervision has a playbook for this. So supervisors are talking to banks about their concentration in real estate and what can they do and how do they manage themselves out of this. It's something that we're well aware of. It's not a surprise, and we're focusing on it.
Is it one of the reasons you were cautious in the last meeting?
Commercial real estate? I wouldn't say so. No, I just, generally speaking, it was at the last meeting. It was about, what's in the pipeline, how far we've come, what's in the pipeline. I will also say that, though, that the bank stress part of the decision, in my thinking anyway, was the bank stress that we experienced earlier this year.
I agree. She's doing very well.
Research showing that when something like that
finally asking some good questions
credit
here.
Availability and credit can move down a little bit with a bit of a lag. So we're watching carefully to see whether that does appear. Of course, tightening in financial conditions is what we're doing intentionally. So we have seen bank credit conditions tighten. The question is, and that's what we're trying to achieve. The question is there another channel of that or a greater amount of that coming from what happened in March? We don't really see any evidence of that, but I think that's certainly in the back of my mind to see whether we do see that.
Yeah, it gets into the question about lags. How long are lags, Governor Bailey? And do you expect to see more?
It's a very interesting question in terms of the transmission of our monetary policy decisions. So if I can just illustrate it with the UK case, and obviously it's not the only part of the transmission mechanism, let me be clear, but it's an important part, and illustrate it with the UK mortgage market. So we've seen a big structural change in the UK mortgage market since the last tightening cycle of monetary policy, which of course, accepting passage of time, was about 20 years ago actually. And that change has been a change from a variable rate mortgage market to a fixed rate mortgage market. Now, I must say, obviously with Jay here, it's not a US style fixed rate mortgage market. It's a
rejection.
Term.
So far,
term is often around 5
for
years.
15 minutes till the next closure.
But we know, and we think around about 85% of the stock of UK mortgages are now sort of in that part of the market. So we know that the transmission of monetary policy is going to be slower as a result, because obviously it depends upon the sort of the timing and the sequence of those fixed terms coming to an end often. So we have to judge that. I mean, it's another factor and another sort of element of uncertainty that we have to judge when we're taking our decisions, which is how much of the tightening that we've already done has come through and how much is yet to come through. And we know that referring back quite a way into the past isn't going to help us in that respect. So we have to sort of formulate those views afresh. And so it is part of our decision-making calculus is how much more has to come through, when will it come through.
Let's see if we can flip here with the U30.
How powerfully will it come through? And all those things are things we have to take into consideration.
Set an alert.
And as I said, history isn't going to be a great guide for that, given the change in the market.
So a year? What's a lag?
Well, what you see, and of course you can compute, is the sort of the profile of mortgages coming up for renewal. Yeah. Renewed terms, and we can see that over the next year or so, there's quite a lot of fixed rate mortgages are coming up for renewal. So yeah, we can factor that in. There is another element, I say, of uncertainty as to just how that will work its way through.
President Lagarde, how do you think about the lags?
I think of the lag in 3 steps, if you will. The first one is transmission in terms of tightening of the financing terms that are made available and how markets absorb the decisions that we make. And on that front, we have a good and reasonably rapid transmission. We see it in rates, we see it in volume of loans, and on both accounts, there is a good absorption and a rapid transmission of our monetary policy decision. But that's only step one. What we need to see is step two and how it materializes on investment by corporate, and for households, it's predominantly mortgages. And for the euro area, there is a lot of heterogeneity, because you have markets where mortgages are at fixed rate, markets where mortgages are at floating rates, some that are readjusted.
She looks like my aunt.
So many years. So we have to look at all those data very carefully.
I'm not joking.
But it seems that the transmission is likely to be less rapid than it had been in the past, because there are many more fixed rate mortgages now in the euro area than there was, say, 15 years ago. And that's not it. We need to see it then, channeled to the third step, which is inflation. So we want to see that transmission strength through step one, step two, step three, and make sure that this is really having an impact in terms of the fight we have against inflation.
All right, let's just break above the 1912 and take a trade from there. What do you guys think? Let's just take along from the 1912.
On the global economy and on your economy?
Oh, yes, but for ourselves, we haven't had any serious monetary tightening for 3 decades. I was a board member of the BOJ 25 years ago. Then the policy rate was about 20, 30 basis points.
1917, yeah, I agree on this one, for sure. That's for sure.
And it doesn't sound like it's changing anytime soon.
So in terms of that, the lag in the effects of monetary policy could be at least 25 years. We'll see what will happen if we get to normalize policy seriously. But we'll have to be very careful here.
Be careful what you wish for, I guess. So, Chair Powell, are you more worried about the lag impacts than they are because they're still hiking rates?
I don't know. I wouldn't want to compare. I would just say again, so what's different this time is actually, though,
Bank of Japan, minus 0.1%. Still, can you believe it? Still negative.
Of 2020.
The yen has been plummeting.
The 2-year had moved from 20 basis points.
Absolutely nuts. Absolutely crazy.
So financial conditions now move in expectation, and the whole modern communication strategy really helps that along. So that is different. What may or may not be different, and we also haven't had this kind of tightening in 3 decades. Really, we've had tightening, but it wasn't. This looks more like tightening cycles from the 70s and 80s. So what we see is a picture of literature that has you can.
Let's see if you can flip it with the sturdy coming back up again. I would not be surprised though.
And add a year for inflation.
If you come back up to this era of consolidation, if you flip here on the lower time frame,
to watch and see what's happening.
If not broken this low, it's a higher low.
Beginning to be, there are reasons to argue that it would be faster this time or slower this time, but I just don't think we know at this stage.
Well, it kind of gets into the question about the markets, and you're saying that it's a transmission mechanism. You're all talking very hawkishly and saying there's more work to be done, and we're still worried about inflation. The markets pretty much think you're almost done.
I have an alert set there.
Maybe one more hike in July, and then done, and then into cuts next year. Is that wrong, President Lagarde?
I look at the data we have. I look at the mandate we have. I look at the transmission lag, and we've decided for ourselves that we would use 3 criteria. That's what we are focused on. Of course, we are not completely oblivious to what happens in markets, but we have to be guided by what the mandate is, what the data delivers, and what criteria we take into account in order to determine our policy. And to establish our stance going forward. That's the only way to go.
But I guess there's financial conditions, and I don't know, Governor Bailey, are they working against you? You're trying to fight inflation, and MSCI World is up nicely this year.
Well, by the way, I mean, the market, I don't think thinks we're nearly done at the moment. I mean, they've got a number of further increases priced in for us. My response to that will be, well, we'll see, because we are, as we were saying earlier, we're essentially evidence-driven in that sense. So,
10 minutes.
Yeah, we'll make our decisions based on that. I think you're right to point out, as you said earlier, and I would draw this point out, that there are two parts to this. There's where the peak is and then how long it's sustained beyond that. And I think both of those are relevant. Both of those are things that will, I mean, sorry to state the blunt and the obvious, will emerge with time. But I've always been interested that the market thinks that the peak will be quite short-lived in a world where we're dealing with more persistent inflation.
Right. I mean, they did finally price out the cuts in the US a few weeks ago. Market was primed for cuts.
Let's see if we can take a trade
You
here.
were pleased to see that that's
to
no
fill up
longer
the gap.
case.
So if you go back and look at forecasts from the participants on my committee on inflation, you'll see, you know, we've been consistently thinking this is going to take some time. It's going to be a process that will take longer than we would have hoped. And it may well be a bumpy process. But markets have gone back and forth between pricing and what appearing to price in pretty quick declines in inflation to coming back to being more in alignment with the thinking of the committee. And that's where we are right now, is closer to where committee participants are. But as Christine said, you know, we're not focused on what the market's forecast is. We have our forecast, all of us who are on the committee, we work hard to develop.
Same for sales, by the way, I like it.
Inflation and what the path forward for inflation is. We make our best estimates. And that still is that it's going to take some time. It's just going to take some time. Inflation has proven to be more persistent than we expected, not less. And of course, if that day comes when that turns around, that'll be great. But we don't expect that. We don't plan for it.
So is it counterproductive to you that the stock market has rallied, the bond market has rallied? I mean, the market is fighting the Fed. The market thinks you're closer to the end. And I mean, that does make financial conditions easier.
Wasn't that the...
You can't fight the Fed, but they're fighting the Fed. Is that a problem for
I
you?
don't see it that way. I don't look at it that way at all. Honestly,
She is actually...
Our job is to bring
she's a
inflation
G.
down to 2% and sustain maximum employment.
Wow.
That's our job. That's what we think about.
Because
We
it's
look
so
at the
true.
data, and that's what we care about. And markets react, different parts of the market react in different ways. It's just not something that is a principal focus of our work.
But it did seem last year like you wanted a weaker stock market. You used the word pain at Jackson Hole. It seemed like
Very,
you
very
were trying to
impressive.
communicate
Very
that financial
impressive.
conditions should tighten, and less so this year. Is that right?
Not really, no.
Okay.
Of course, we work through financial conditions. That's what we do. Our rate and our, you know, all the things we do and say work through financial conditions to affect the real economy. That's how it works. But it's broader financial conditions. So we're not focused on any one market. We're never thinking, oh, let's do this to this market. It's just in general.
What's your
let's
Instagram?
communicate what we want to do, and why we want to do it, and financial conditions adjust. And that's really all we can do. We do not target particular parts of the market, although of course we do monitor market conditions.
So you don't care what the stock market's doing?
I look at broader financial conditions. It's one of many conditions, along with interest rates, credit spreads.
Okay, dollar broke the highs.
You know, everything, all of the conditions and the availability of credit. It's one of many things. Again, we don't focus on any one thing as the key thing.
Governor Wada, how important is it to you, the markets, as it relates to financial conditions?
Let's flip here. Come on,
the
let's go.
mechanism for monetary policy?
I mean, the stock market.
Stocks, bonds, currency.
So stock prices have been rising fairly sharply since spring this year. Stock prices theoretically are affected by interest rates and investors' view of the economy. We haven't changed interest rate, so probably investors have become more optimistic about the future of the economy. Of course, we don't want serious financial imbalances in the economy, so we keep monitoring.
How do you think about, President Lagarde, the risks to the economy, especially geopolitical risks? You know, in Europe now we have this, we were all glued last weekend.
All right, we're
to the
moving
news
up.
out of
Dollar.
Russia
Let's see if
and
we
the
can actually
government
flip here.
rebellion, and we're wondering if now political
US 30 didn't
instability in
close.
Russia
Let's see if we can
presents a
close
further
below.
geopolitical risk.
Preferably on the 30 minute.
Well, I think I look at it we all look at it and we are all concerned about geopolitical development by virtue of the profession that we have, because it does have an impact on supply chain, it does have an impact on trade, it does have an impact on the uncertainty.
Okay.
And we can only say that at this point in time, uncertainty is high overall, and a big factor of that uncertainty has to do with the geopolitical difficulties and conflict or quasi-conflicts that abound at the moment. So yes, we are looking at that, but do we have to make a moral judgment on this?
5 minutes, 4 minutes, 30 seconds.
This is not the job that we have, but it clearly has an impact on how the economy is going to change and be transformed, and whether it will have an impact that is inflationary or disinflationary, I think is also to be determined. I think there will be various schools of thought along those lines.
What is gold doing? Gold is ranging.
About next winter. I mean, Europe got lucky.
We hope it's mild.
We swiped some liquidity on both sides. Now we're looking for the mule
What
move.
if it's not?
But storage is what, 69%? Michael, the expert on Isabel's panel, said that 69%, and we are going to hit 95% by the end of the summer. So that should put us in a good position for the winter. But I'll say one thing, which probably we had not factored in sufficiently, and maybe that applies to all of us. It's the resilience of our economies and the resilience of the entrepreneur, the corporates, the way in which we have sort of, in a matter of a few months, reorganized ourselves. Just think 1 year back, everybody thought that the German model was dead, that Europe was going to be completely on its knees. Well, these things have not happened, and the resilience has been demonstrated at all levels of society.
I totally agree with Christine on this. That resilience, I mean, you see it when you talk to businesses. I spend a lot of time talking to businesses, and I've spent a lot of time in recent months talking to food-producing businesses to try to understand the sort of, the slower than, frankly, we expect
Food-producing, interesting.
decline in the rate of food inflation. And one of the things that I get quite consistently, and this is where sort of the Ukraine-Russia situation comes through for real, is they say, well, last year we bought forward sort of supplies to a much greater extent than we would normally do because we were not confident we could actually get them. Consequences, we've locked in higher prices for, sometimes they say 6 months to me. And that, of course, is affecting the passage of inflation, particularly food prices in this case. So these things do have a very direct effect and are continuing to have a very direct effect, actually.
But there's nothing central bankers can do about that, is there?
Well, I think the first thing we need to do is understand it. That's a good starting point. Well, we have to then design.
You can always just keep crushing demand, but you can't do anything
Well,
about
we have
food
to
supply.
design policy. I mean, we have to design policy and take our decisions with the best. We always take policy. We always take policy decisions on a forward-looking basis. So we have to do it with the best information and understanding we can get of these things.
So do you still? So to what extent, I guess, is the war in Ukraine driving supply-side inflation for materials around the world?
Well, following on from what I was just saying, I think the conclusion I draw from that is, and this is what the businesses tell me, is yes, we are going to see actually a fall in the rate of food price inflation, for instance, but it is taking longer than we expected. So that's what we have to factor in and decide how best, in a sense, to respond to that with monetary policy.
It's not just Russia. Governor Ueda also, we're following the tensions that have increased between the U.S. and China, between Europe and China. Do you think that's having a material impact on global growth?
Well, at least there's a tendency to relocate production sites out of, say, China into other Asian economies, including, to some extent, Japan. So in the short run, this is
still in the range.
A small positive effect on Japanese.
We're seeing a closure in 45
This
seconds.
is fixed investment. But in the longer run, there will be inefficiencies.
Shout out to March
all over the
15.
place. So we'll see.
So Japan's a beneficiary of the flight out of China?
In one sense and in the short run. But in the long run, I'm not sure.
I mean, Chair Powell, how do you think about, it's obviously a risk and it hurts trade. How do you think about the U.S.-China relationship as it impacts the economy?
So that is the way we think about it, we don't have any role to play in the relationships between the countries. But you know, China's a very large, important economy. It's a big trading partner, mainly consisted of us buying things that are made in China.
I'm gonna eat a big fat burger soon, man.
Came out of the COVID and looked
After
like it was
listening to
recovering
these
strongly.
guys.
Now it doesn't look like that. It looks like it's slowed down, and there's some issues there. From the U.S. standpoint, at the margin, that probably means a little bit less global demand. I wouldn't say it's
I'm gonna order one right now.
a consideration for us, though.
How does the Chair Powell reference the disappointing nature of the Chinese economic recovery? How does that play into Europe's recovery or the global growth picture?
Well, first of all, I think we have to be attentive to the emerging market economies at large.
No, but I have to agree. She's doing very well, asking very good questions.
60% of global growth, some of which is now a bit more focused on domestic development and consumption, and less so on trade. But if you look at the trade volume numbers from China to many other countries, particularly the advanced economies, that has not changed significantly. So the trade volume is still significant. And you know, I'm not breaking any news here. The Chinese authorities themselves say that they're likely to have a 5% growth this year in 23 rather than the 6% that they had initially forecasted. So that will have an impact, given the size of the Chinese economy, on global growth.
Yes, correct, Ash. We made some changes for the community.
You know, when we do our projections, when we look at the economy, we look at the global economy, and then we sort of narrow down and zoom on the European economy and the euro area in particular. But everything that happens in China, in the United States, in the UK, in Japan, in emerging market economies actually matter for us, because we are strongly interrelated and have been trading with each other for a long time. And if anything we've learned from COVID, in addition to the pain and suffering for many, is the fact that we are vastly dependent for the supply of rare earth and various metals that will be critical for the development of the economy of tomorrow if we decide to firmly go towards the green economy that we should be aiming for.
You know, as an open economy, one of the things is just exactly as Christine says in terms of how we do our process. One of the things that we spend quite a bit of time on is world export prices. Now, actually, in the recovery from COVID, and of course this was the supply chain shock, we saw quite a big contribution to goods price inflation from world export prices. We're now seeing those prices definitely start to weaken. So that will be another determinant going forward of policy.
As central bankers, do you plan for the worst case scenarios on the geopolitical front? I mean, if China invades Taiwan, then what? What does a central banker do? Is there a contingency for that, Chair Powell?
What are you going to answer now?
Tools to achieve our legal mandates.
Yes, Jerome first. Wavering it off. Wavering it off.
You'll hold
That's a good one.
Special. No, I mean, it's a volatile world we live in, right? And
Keep pushing.
which
We do
impacts.
have, in every FOMC cycle, we look at, our staff works up 6 or 7 or 8 alternative simulations, and they simulate, you know, different things. It's not so much geopolitical events, though. It's more different ways the economy could play out. And we all the participants read those and think about them and talk about them, and they come at.
She's talking specifically about geopolitical events.
Because you can't get too focused on the modal path in a world where it's just very hard to predict the economy, even in normal times, it's very hard to predict the economy, let alone times like today.
What sort of simulations do you talk about?
Perfect.
I'm going to leave that
Let's
to
go.
imagination.
I bet I can think of a few. President Lagarde, Chair Powell did talk about, I mean, one of the things that I don't know that there was a simulation of is we had a few bank failures in the US this year. And I know it forced some of you into action to shore up banking systems. Are we in good shape now? Is the global and European financial system in good shape? Have we healed?
You know, I can only speak to the banks over which we have supervision, and those are the euro area, the European banks. But I'm looking at the euro area specifically. We have been, you know, enforcing Basel III to the entire banking sector. The capital ratios are very high, 15.3% if I recall. The leverage coverage, the liquidity coverage ratio, very high as well. So we have not experienced, you know, the turmoil or the difficulties in Europe, and Europe does not include Switzerland. Thank you very much.
We're heading into the right direction, guys. Almost
We are
30,000.
extremely attentive. We reinforce the stress testing constantly.
Thank you for the support. Thank you for the love.
I'm very pleased to see that the Basel III agreement has now been reached, as I understand, between Parliament, the Council, and the Commission, so that we can actually roll out Basel III.
Dollar facing serious resistance right here.
As possible, and we have to continue doing that job.
Any lessons that you took, Governor Bailey, from what happened earlier this year?
Still in that range.
Let me start with a sort of bit of backdrop. I think it's important, drawing on what Christine was saying, I think it's important to, in a sense, reflect the fact that the regulatory changes we made after the global financial crisis have paid off, in the sense that we've been through, and we are going through, some huge economic shocks. And the banking system, certainly I can speak again as Christine does, I can speak for the UK banking system, is resilient to them and is doing what we want it to do, which is support the economy, not the other way around, to be honest, going back to the crisis. So that's an important starting point. Now, I think there are important lessons from, important issues that we have to reflect on from what happened. Christine made her subtle reference to Switzerland.
Beautiful.
Well, there's a huge sense of irony in the British, Christine.
nice bullish momentum.
Look, I mean, there is obviously
heading into the right direction
by the Credit Suisse, handling, which is, are the resolution plans for the major banks that we've spent the last 15 years?
Pay very close attention to the U30 right now.
Fit for purpose.
8 more minutes.
Are they not fit for purpose? And I'll come to that. If they're not fit for purpose, then of course we cannot sit here and say all's fine, because clearly we're going to, regrettable though it would be after 15 years of work, we're going to have to sort of, tear them up and start again. Now, I'll give you my view on it. I'm going to say this. I have not yet heard the case made to me which suggests that they are not fit for purpose. I'm going to state that, but I'm not going to leave it there. We have got to have, we've got to have this out and decide whether, it goes one way or the other. My starting point is I remain to be convinced of that assertion.
I like this. I like what the U30 is doing.
It rests there. I think we've all got the question of, how our banking
A beautiful gap here.
handle, a steep rise in interest
Closure
rates.
above.
We
Flipping
stress
around this time would be
test that.
amazing.
We've got capital provisions for, related to that. And we've all got to think hard. I think the third thing I'd say is we've got to think hard about the speed of run question. But I think we've got to think pretty carefully about that, because if we go to extremes on that argument, we're essentially heading to narrow banking. And speaking myself, I don't think that is a sensible place to head to. So we've got to think quite carefully, but quite, I think, creatively about how we maintain the banking system that does what we want it to do, which is create credit in the economy, create assets that are naturally illiquid, and deal with this speed of run question. And we've got to take that one on.
We're actually going to get stress tests this afternoon in the US, which I won't ask you about, Chair Powell, but I will ask if you think that the US regional banks are resilient right now.
I do. So I think, first of all, I think the overall banking system is strong and resilient with very high levels of capital and liquidity, double the levels that they were at, and then some before the crisis. So the innovations that we put in place, the regulatory changes and higher capital, those are all in place in the United States as well. So when it comes to the events we had earlier this year with 3 banks that had pretty idiosyncratic business models and funding.
U30 shows the most potential, to be honest, right now. Gold is stagnating in that range. U30 is at least showing us more volume, a bit more reaction here. So yeah, keep your eye on that level right here. The 33,830.
Mostly what they wanted to talk about.
They want to make sure that you aren't, in part, not going to increase capital levels and sort of choke off the small and regional banks in this country and make it hard for them to compete.
So the U.S. has something like 4,500 banks. It's the most banks by a pretty big margin, I think, of any major economy. And we think it's a real benefit to have banks of different sizes and business models that serve local communities and offer different products, as well as having the large banks. And the large banks in the United States are very strong, well capitalized, a lot of liquidity. And they've been a source of strength, I think, through the last couple of events. So I think it's important that whatever changes we do make, keep in mind the need to preserve the business models of these of smaller banks and not just of the largest banks.
Any concerns for you, Governor Ueda, on the strength of the global financial system at this point as we go through this, I don't know, once in several decades tightening period?
I can only talk about Japanese banks. I think they are well capitalized. They're capitalized. They have enough liquidity. It's true that some smaller banks, regional banks, are sitting on non-negligible amount of valuation losses on their security holdings. But on average, that's about 1% of their core one capital.
Come on, let's give us some volume.
That'd be okay. But if
I'm going to give it 20 more minutes.
Normalize our monetary policy because we go into the 2% inflation rate equilibrium in the sense I discussed earlier, then rates may go up by large margins. And we will have to be careful. We'll have to be carrying out all sorts of stress tests, I think.
I also wanted to ask you, if you go into a more normalization stance away from negative rates and the yield curve control, how you'll manage the risk of the government's enormous financing needs, and whether that's a concern that you think about.
Well,
are we going to enter the studio? Yeah, if you break above it, yeah.
That's the business of the government and the diet.
Break and close above it.
To create sustainable government finance.
Fiscal policy in general, I'm curious if you guys will bite on this. Is it helpful right now or hurtful, President Lagarde?
You know, everybody has to do what everybody has to do. Man's got to do what a man's got to do. Monetary policy makers have to decide on monetary policy, and fiscal policy makers have to do their job. It is true that there are circumstances where working hand in hand and supporting each other has proved helpful. I think we had a very good demonstration this morning in one of the lectures that we had. I think what we have very clearly stated as a governing council of the whole Eurosystem is governments, please, it's time now to roll down the measures.
Dollar pushing, yes, but there's not much.
For COVID and
not much happening around this range right here. Same for these 30 cents for gold. We're all in that same range, exactly where we started.
Better sustainability of your public finance. So we hope to see that. You know, the fiscal space that has been allowed for the various non-conventional fiscal support that were decided back in 22 and 23 very much should be rolled back in the course of 23 and certainly should not be expanded in 24, bearing another major shock. But that's our recommendation, and we make it very clear in our monetary policy statement and have made it very clear in the last statement that we issued.
I mean, we learned in the UK, what was it last year, when monetary and fiscal policy don't work together, it can be a big problem.
Well, because what we had to deal with in the UK last autumn was actually a financial stability issue, and we dealt with it, and it was very clear that that was the issue we dealt with. We didn't deal with anything more than that. It's not our job to get involved in fiscal policy in that sense. And we always, when setting monetary policy, take fiscal policy as announced, as a conditioning sort of assumption for our decisions. So I don't go beyond that in terms of commenting on the stance of fiscal policy. I mean, the one thing I've said in recent times, and I don't mind saying it again, is that I welcome the fact that the Chancellor is very much using fiscal policy to try to address the structural issues in the economy. That's not a comment about the stance of fiscal policy about more or less. It's a comment about the fact that, going back to the point I've made about labour markets, and actually the low potential rate of growth in the UK economy, that the more we can do to tackle that, frankly, the better.
What about you, Chair Powell? I mean, there's been a lot of fiscal largesse in the United States, the COVID stimulus, and now even new policies that are just filtering through, like Inflation Reduction Act, infrastructure, chips. There's still American Rescue Plan Act money getting doled out. Isn't that making your life harder?
Well, so echoing my colleagues, our assignment is to deliver price stability kind of regardless of the stance of fiscal policy. And we don't play a role, formal or informal, in advising the fiscal authorities. There are other agencies in Washington that do that, and that's really not our job.
Okay.
I will add, though, without crossing any lines, that the spending during the pandemic was very high, and it's come down. And so we look at the fiscal impulse from the level of spending, and it's really not material. It may even be slightly contractionary, but let's just say it's flat. You identified those bills, and I think you are seeing some of that money showing up in construction. This construction numbers, it's supporting construction activities, particularly the infrastructure bill. But I wouldn't say that that's if you look at where the inflation is in the economy, I wouldn't say that that's an important driver of inflation or something that we think about or consider.
So you mentioned the consumer, so the excess savings you think have pretty much come down. Where do you think the U.S. consumer is headed?
The consumer had savings from two sources. One was just the fact that people couldn't travel and couldn't kind of spend money on services. That was a lot of it. And there were also the fiscal transfers that happened. And those, there are many different estimates. I would say for people at the lower end of the income spectrum who tend to have a high marginal propensity to consume, most but not all of that money is gone. So there's certainly some residual support for spending.
Definitely strong buys above the 1912, but we're starting to see a lot of selling pressure from this level right now.
I would say that's today the main driver. I think if you look at the strength of the labor market, still creating more jobs than there are new entrants to the labor market. And wages are still pretty high, so you're driving
again the
up disposable
19.8,
income, and that is driving consumption, and that's driving the economy.
Wanted to also ask you guys about the balance sheet, very hot topic. Governor Wade, how do you think about the expansion of the balance sheet, and how much is too much?
Well, it's a tough question to answer. At the moment, we are using government security purchases to hit the range for the long-term interest rate we have set, which is 0 plus minus 50 basis points. So the size of the balance sheet is an endogenous variable.
The rest of you are kind of in shrink mode in the balance sheet, or roll-off mode. You've been more aggressive, Governor Bailey. Has it gone smoother than you expected?
Well, so far, I don't want to tempt fate, it's gone very smoothly, actually. By the way, the reason that you say more aggressive, just to be clear, is that we've got a longer duration of bonds in our portfolio, government bonds in our portfolio. So leaving it to an organic runoff would mean a lot longer runoff for us, I think.
That's why you're outright selling.
So that's why we're selling. And so the target we set for the year, the 80 billion target, was the sum of the natural runoff plus the difference between the target we set and that. And it's that element that we're doing as active sales. So that's gone, I would say, very smoothly, actually, so far. I'm very happy with the way it's gone. I think the second
11
question
minutes.
that we're certainly looking at actively, of course, is just how far will we go? And I look at it particularly in terms of the stock of reserves now in the system before we hit what I would call the equilibrium level of reserves. Now, we may go on selling the QE stock below that because we would shift our operations around. I would expect to do that. But it's important to focus on where we think that sort of natural level of the balance sheet, which won't be constant over time.
Crucial moment for gold.
Where we think that natural level of the balance
Crucial
sheet.
moment. If you do break below it.
How do you think about it, President Lagarde? And is there pressure building for you to go faster when it comes to shrinking the balance sheet?
I would say that the interest rate is the primary tool that we're using at the moment. Second, there is almost a contractual reduction of the balance sheet of the ECB because there is a reimbursement of the TLTRO that we had put in place during the pandemic, and that is actually happening now, if not yesterday or the day before. Third, as of the 1st of July, we will stop any reinvestment under the asset purchase program. So there is a natural declining of the balance sheet of the ECB, which is only a first step. We are discussing our operational framework. Hopefully, we will be able to complete that work in the next 6 to 9 months, and
Pushing
that
up
will
again.
really determine the size, the desirable size of our balance sheet. Which
Facing a lot of resistance right now, though. If you look here on the 5 minutes.
And the situation we are in, but that is coming.
Is it going smoother than you thought it would as well, Chair Powell, QT?
Say it's working as we had hoped and expected it would work. We have a entirely passive program as treasuries and mortgage-backed securities mature. They roll off subject to a cap, and it's been moving along at a pace. The underlying pace, if you hit the cap, is about $1 trillion a year, and reserves appear to be quite ample. So it has a ways to go.
Is there anything that would make you speed that up or slow that down?
You know, we always say that we're prepared to adjust in light of evolving conditions, but I don't see anything that would cause us to want to do that right now.
Okay, so in the moments that we have left, we've talked about a lot of the risks. We've talked a lot about some of the concerns out there. I want to hear some optimism, maybe, and what makes you feel. I mean, none of you are really talking doom and gloom on recession, but what makes you, President Lagarde, optimistic right now?
In my professional field?
However you want to interpret the question. Personally.
Otherwise, there are lots of things that make me happy, and I hope for all of you. I'll just mention one success, which I'm really proud of, and I'm very proud that Fabio Panetta was the one who led that exercise on behalf of the entire group. Today, the European Commission has published the legislative draft for the European digital, for the digital euro, for our CBDC. And that gives me hope, because I think that it really demonstrates the capacity to innovate, the capacity to work as a team, the capacity to anticipate what digital payments will be tomorrow. Now, some people are very skeptical, and they say, well, you're taking risk, financial stability, possible runs that will be accelerated by this. And all I would say is, number one, you have to be ready. You want to keep the sovereignty of your currency. So many years ago, who would have thought about all the users and the applications that you have on your cell phone? None of us. So being prepared, being ready, paying attention to what actually Europeans, and particularly young Europeans, want in terms of currency and form of currency is something that we have been doing, that we have accelerated, that we have not decided for sure, but at least the legislative piece is on the table. There will be a lot of discussion. And that's, in a way, also the result, one of the good benefits of COVID. We have talked about the downside of COVID and the consequences, but the way in which so many of us have become more digital, better equipped, probably more productive. It will be demonstrated probably with a lag time. But when I look at my member states, the countries that were least digital have really traveled very fast to become much more digital. So that's a good reason to hope. And the resilience demonstrated, but I have mentioned that earlier on, by everybody, from the individuals to the entrepreneur to the corporates to governments. We, in Europe, decided to get together to borrow jointly, despite the fact that it's laborious, that it's painful, that it gives a lot of things to report about to a journalist, is also a sign of progress.
And just to be clear, a digital euro will happen when?
That will be decided by the governors in Governing Council. We will decide that at the end of October. And then there will be another phase of piloting, experimenting, fine-tuning, because if and when we go, as will be decided by the Governing Council at large, we want to get it right. So we're not going to do a half start or a fake start. We will move with success.
What makes you optimistic, Governor Bailey?
Well, actually, I'm going to build on Christine's theme, because as well as we're also working on retail digital euro, we're actually also working on wholesale digital money and completely rebuilding our wholesale payment and settlement system in the Bank of England to enable what could be a complete revolution in the infrastructure of financial markets and trade finance. And this is very exciting. So we put the wiring in the weekend before last. The engine should go in next year, and this has enormous potential to change the world, and at the wholesale level as well.
It's interesting, I feel like the world has moved on to AI beyond digital payments. Are you guys incorporating AI into your thinking about economies?
1 hour close, looking very good.
think we're all on a learning curve. I don't know, I feel quite old when it gets to this. But yes, I mean, we're looking at it in two respects, certainly. One is, well, three respects. One is how it will affect the economy. Two, how we can use it ourselves, both in our sort of, analytical functions, but also actually in our operational functions. And yeah, we're looking at it, I would say, with very open eyes. You can see the strengths and you can see the, the current weaknesses of it. And of course, it moves very rapidly. So yes, we're having to, certainly I can speak for myself.
Billy Joe, digital currency will track everything in our lives. I agree. Completely.
Chair Powell, is AI one of the things that makes you optimistic?
So on AI, we're just doing what everyone else is doing. We're trying to get smart about it, and it's obviously has huge possibilities. Technologies tend to, propagate through the economy fairly slowly, and this one may be the exception, maybe not, I don't know. But it's something that we're spending a lot of time on, way too early for conclusions. I wouldn't use optimism, but I would say this, in answer to your first question, which is, when inflation first arrives, it's really due to very strong demand for goods and goods pipelines that just aren't working, and shortages. So that's where it comes from. It wasn't about the labor market at all, right? Or very much. As we get to this stage and to looking forward, we think it will be significantly about getting the labor market, supply and demand, back in alignment. I would say it's a positive thing, I'll say it that way. It's a constructive thing that we've been able to raise rates 500 basis points with the expectation of going further, and we still have a very strong labor market, but nonetheless one that is in fact cooling in just the way we would have hoped, which is to say through things like lower job openings. Job openings are coming down. The quits
We give it 4 more minutes right now.
It's pre-pandemic level. Wages have, if you look at employment compensation index or average hourly earnings, they've moved down about 1% towards more, still very high, but towards more, so a more sustainable level that's consistent with 2% inflation. So I would just say that's the makings of, if that process continues in a gradual way without really any effect on employment, the longer that goes on, the better. And in a way, I take that as a very constructive path. It is not guaranteed, but the fact that this is really there, and that's what's been happening for a year, more than a year into our tightening cycle, I would take as a positive thing and perhaps a hopeful one for the future.
Just be careful not to overdo it, right?
Right.
What about you, Governor Ueda?
Let's see. As other central banks are thinking of issuing digital monies, we are taking a different route, and we have decided to issue new currency bills starting next year.
You're going all in paper.
This will cheer up public's confidence in the BOJ. More seriously,
that guy is the Bitcoin founder.
as I said, wages have started to rise at 2% or so.
That's our Satoshi Nakamoto here.
More importantly, we are seeing as a sign of
2 more
change
minutes.
in inflation expectations, changes in price wage setting.
I want to see closer below this level, the level where we are right now.
Businesses hesitated to increase prices because if they did, others will not follow suit. Now say they are raising wages because if they didn't, they will have trouble recruiting workers because others are raising wages. We think this is a good sign for us.
So the topic of Sintra of this ECBU forum is inflation, volatility. So now is prediction time. In 1 year, when hopefully I'll be invited back, President Lagarde, inflation rate in the UK is what?
Well, our last forecast, we expected inflation to come back to target towards the end of next year. We're going to start the next forecast in about 2 weeks' time.
I was trying to
Yeah, you're
get a
trying to
jump
get further
on
than
that.
that, yes.
Yeah, I was trying to
Nice
jump
try.
on that. Do you get to 2% by this time next year, President Lagarde?
You said a year from now, right?
Yes.
Okay, so the projection we have is 3% for next year. Headline.
Will you be satisfied with that?
I want it to be timely. We all want it to be timely.
Timely. Okay. Chair Powell?
I don't see us getting back to 2% this year or next year.
You don't?
No. I see us making progress, steady progress on, and this is core inflation.
Yep.
Headline inflation is coming down now.
All right,
It's lower
30
than core.
seconds.
But for core inflation, I don't see us getting to 2% this year or next year. I see us getting there the year after.
2025.
Yeah.
Core inflation 2%. So you're going to be restrictive for a long time.
No, well.
Okay, I'm going to close the speech very, very soon here. And I'm just going to go over the charts right now. I don't think that we have something special coming or anything in that matter that will give us an impression of, you know, more volatility here. I think this is what we needed.
You would begin to think about
so let's do that.
Policy, but we're a long way from that.
We have the 1 hour closure right now. We closed within that range. To be honest, yes, we saw some selling pressure here. Okay, coming in, we came down a little bit. I think we moved down a little bit with like 25. We moved a little bit down from that moment. We saw that some selling pressure coming in right off the top. You see that these top wicks were created for now. At the same time, I still see the same thing happening here, and that is that if we continue down here, then I want to see that closure below the 1903 for the continuation. Otherwise, I'm still just into the same levels, which is gonna be the 19012 and the 190, potentially 1905. There is one more level here in between, like we already talked about from the beginning of the stream, which is right there, the 1905.6. I'm just simply gonna wait for like a 30-minute candle closure in that manner to then potentially look for the continuation here. But the volume now needs to start kicking in. Of course, the hourly closure has been completed. Further than that, we have the 30-minute also, which is showing us a little bit more information. But yeah, you saw some selling pressure coming in, but at the same time, the confirmation was not possible, and I think I need to stick to my rules in order for an entry, like we did yesterday. I think that was the perfect example of where you stick to my principles right now for the trade itself here. Let's see what else we have. We have for the rest. Let me quickly go over it right now. I think we for the rest have. Okay, you guys are talking about the Usd. Let's have a look here. And also let's have a look at the GJ at the moment as well. Give me 1 second. Where did the yen close right here? There we go. Okay, we have the hourly. Okay, finally we did it. That's great. That's really, really good. So we finally actually closed above it here. Man, that took a long time, but we finally closed the body above it. That's a very important moment. A very important moment. Look at the bottom wick. On the next candle. This took a very, very long time here. But I think indeed, if you look at the GJ right now, yeah, this is what you want to see. This is exactly what you want to see here. So yeah, there is still potential. There is still potential right now. Looking at that continuation here. Let's see what we have. We have not that clean action right now at the moment, because we're at a level right at a strong area of support at this particular moment right here. So this is not the level I would look for. I would look for this level right there, which is the 182. Pretty much the 182. Something in that manner. Nothing above it or below it. I think you can still, face that support right now for GJ. You can already see it kind of at this specific moment here, that this is what you're looking for. Okay, so again, the 182 is more interesting. Gold is now pushing back up again. Okay, I'm actually starting to see right now something very, very interesting. Look at how we're building that trend at this particular moment. Look how we're like also holding within that range here. Yes, we saw some resistance coming in, sellers stepping in, but at the same time there are a lot of buyers stepping in as well here. This range has been holding extremely well. So that expansion out of this range here, either up or down right now, I would actually start definitely removing this particular level right now as our sell level, and start thinking more about this level below on actually the 30-minute. So not even the 1 hour, but the 30 minutes right here. Just because of this over range and the way you're forming that demand right there, you're forming that supply right there. in the end, every single time you're gonna see gold ranging in between. I truly believe so until you break out of one of these levels. I think that is the most important right there. GJ is making top wick, yeah, but not really, because if you look here, it has been already creating these the double. It's like we call this the double bottom confirmation. So be very careful with that. At the same time, you tap into this area of the month right now. So that's why I'm saying you want to actually wait for a break below that level, which is at 102, 182. I think this is much better sell below that level because of the yen basket as well in that manner. But again, yeah, we can still say, okay, let's wait for a breakout until we see the 1912 and let's look for a long. I think that there is then still a possibility. If you now keep pushing and some more volume will kick into the market right here. Okay. So for now, I keep these levels open. And look at the volume. We're back completely at where we came from, where we got pushed down from right here. Look at the volume coming in right now. This is actually serious stuff. Any break and closure above here is going to be a long. Especially if you hold here, sell below. It's pretty straightforward. And look at the trend line we were building here. We start building a serious trend. This looks like we're going to break out soon. And I don't think it's going to take that much longer here. Could you please check out the USD? Yeah, we can. We can definitely do that. Okay. USD. Yeah, USD broke below that level. That's true. We didn't create a higher high from this low, so we might see a possibility here. I need to look at the volatility index right now, what the correlation is at the moment. Okay, we came up. All right, interesting. It's still interesting indeed. You see that holding. You see this area of the month holding right here perfectly. There we go. What do we need to break? We need to break this particular low. What's the last low? We have a serious level to break though. Just right there. But it's not looking that strong though. Not looking that convincing in general. Overall. But in regards to gold, I'm actually quite confident we are gonna break out of a certain level at some point here. And it's not gonna take that long in my opinion as well. I do believe that we will be able to see it happening very, very soon. Wanted to ask how withdrawals are with IC marks and Blueberry. Blueberry is very quick, very fast. Yeah, look how we're building this trend in combination with these levels here. We're waiting for the break. There is still a lot of demand coming into play. Dollar is indeed getting rejected there as well. We came into that initial zone. We tapped into that area. Right there. Okay, dollar is slowing down. Dollar is slowing down here. I use 30 and GJ is definitely no trade yet. Okay, the only thing I'm looking for is still gold. This is gonna be the last closure we're waiting for. This is gonna be our last closure because it's just too clear. Okay, any breakout, any closure above or below, it's pretty straightforward. It's simply we need to get out of this range right now. That's it. We're forming indeed. You know, you can start trading. We could start trading within that range, but it gets very messy. We had this area of supply though. If you look at the area of supply, you saw that we were getting rejected at that area of supply here. But overall, you see that there are a lot of demand coming into play. You had sellers here coming into play. Any break out of here is most likely leading us into that continuation right there. So I'm gonna just sit and wait until we break out of that range. I'm gonna give it one more candle closure to see if we can break out of this range. And I think I'm gonna focus a little bit more on this one right here. Dollar index getting rejected right now. So look at what the dollar is doing in general here. If you look here in general, we see that we came down. We're starting to build up the same thing pretty much. Is it the same scenario, guys? Is it the same scenario again, like we did last stream yesterday when we got the trade at the end? Do we really have to wait that long again for that break? Let's see. Let's give it one more closure here. Are you a student of Raya Banks? No. Dollar indeed getting rejected right now. If we close below the 103, we could see gold breaking above here. And actually finally breaking above. I think once we're breaking above, it will go quite quickly from there. Do you trade SMC, ICT? I trade everything combined. I combine a lot of different principles. You know, this is how it goes. I think people learn from other people and then they put it together. They create their own thing, what's working for them. And then they just, yeah, and it keeps evolving. I think that's what we're looking at. Definitely took a lot of principles from, you know, ICT and stuff in general. But I do not execute my trades in that manner at all. But overall, yeah, took a lot of learned a lot from it indeed. Okay, look at that. Look at that coming in right now. Look at that volume suddenly coming in here. Look at that volume. I'm very impressed. Very impressive here. After this whole range for such a long time period, still like, you know, showing this amount of volume coming in right now, it's impressive. Makes me want to stream a little bit longer. From what age did you start to trade? 20... 23? 24? 23? 23. 23, yeah. Like 6 years ago. 22, sorry, 22. 7 years ago. Are we really going to see the same thing as yesterday? We're going to find out. We're going to find out here. Where we took our trade at the last... After 4 hours, I believe. Imagine teaching our kids how to trade at age 6 like we teach them to play football. Yeah. Yeah, exactly. So this is a great idea. Definitely gonna do that. I think the age of 6 is great timing. We're treated like a game. Okay, there we go. We're seeing it coming in right now. Impressive. Dollar. Look at the dollar declining here. No, dollar is actually they're getting declined, actually getting rejected right now. Look at the dollar here. Look at what we have been building. Okay, there we go. Let's go. Let's do it. Give us that volume right now. Who thinks we're going to break out in the next 15 minutes here? In the next 30-minute candle closure. Who thinks we're going to break out here? Dollar is coming down right here. Your mom. We'll see. 10 minutes, 12 minutes. Yeah, I'm actually really looking to look for the upside potential here, especially right now. Especially with the dollar coming down here. Why not buy it in 1970? We're breaking out of this trend. We're breaking out of this range. We're creating higher highs. 1917 are strong buys. I agree. Definitely. But yeah. US30 building up something. Yeah, I see US30 is indeed reversing. We're seeing it happening here. Much more appealing as well indeed. To look for that continuation there. I wanted to end the stream, but there is just still potential. I cannot leave you guys right now hanging. Can't leave you guys hanging here. Yeah, I wanna look for buys above here. That's what I want to see. Same for gold. When the London session ends in 40 minutes. So we still have 40 minutes to go indeed. But the next 9 minutes are going to be the most important. That's the last closure we wait for. We really need to see break out of that closure here. Next 9 minutes. Dollar getting weaker. You can see it right now. Dollar is indeed breaking. Dollar is doing its thing. It tapped into the high. It failed to break that high here. The top wick of that overall swing. You have this swing low, this swing high, swing low. Potentially now this swing high, rejection, coming back, fill out the gap here, coming back towards that range, which is this range. There you can see for potential, look for potential bounce here, but this area right now is where I think we're heading towards. So if we come down here, the 102.7, this has to then push gold up. There's no way around it. So yeah, let's see how far we can take it right now, but this is looking promising. Look at gold. Looking promising. With the dollar coming down like that, gold coming up here, 7 minutes left. Gold is a trap. There's a mass bearish reversal on the 12-minute time frame. If you look at the dollar right now, dollar is getting much weaker here. Right? So there is a confirmation from the dollar. I have to agree. We have 30 minutes. We have 6 minutes left. So let's see. See a lot of demand, and a lot of demand came in here for sure. There's that massive gap in between. It's a clear range to range scenario. I think it's definitely strong buys above here due to the fact that you have that gap in between. There's kind of a lot of free traffic from there. But this area is now where we can start looking for buys if that's the case here. And the dollar is indeed breaking below. 6 more minutes left. Be right back. Okay. Action. Woo, 4 hours again. 4 hours in the stream. We have action, we have still volume. 4 minutes to close above though. Confuse your screen, red, cannot going down mine. Is there a delay? Refresh, just to be sure. There should not be a delay here. Couple seconds max. Pyro says start the stream at this time tomorrow. 4 minutes, 4 minutes to go. Dollar indeed starting to lose its momentum here for sure. Three more minutes. Let's do it, come on. Let's stay above it. Lorenzo, I think you have a delay on my side. Let me see, let me test it. No. No. Like 3 to 5 seconds max. It should be around actually 3. All right, 1 minute 33 seconds. What do I want to see? I want to see a bottom wick getting created when the new candle, let's say we close above here. I want to see a bottom wick getting created, followed by that flip. We enter on the flip, stop loss goes below. And we target the topper wick, but of course, potentially higher if that's the scenario. Overall, this looks promising. Okay, 11 seconds. Yeah, come on. Close your buff. Okay, let's come down. Let's come down first. Let's come back to that body and get rejected there. So come up, come down. Come down, come up. Dollar needs to push up and get rejected right there. Gold, I want to see gold coming down a little bit more. Okay, great. Okay. Okay, let's see. If we now get rejected here, we come down. Fantastic. And if gold flips, we potentially enter right there. We will potentially click on the buy button right here. So now it's just waiting. Waiting to see if that's going to happen. We need to get our gold sung up. Without our gold song, we can't trade, of course. Like, what the hell? Okay, let's go. Let's flip. Dollar push. A little bit more, come on. And get rejected at the body. And let's come down. That means that an entry will be there if you flip. Dollar is indeed pushing. It is going to that direction here. Stop loss be below that wick. So we had a closure, we came down. Now we want to see the buyer stepping in. This is the moment, the true moment. Now you want to see buyer stepping in. No buyer stepping in, no trade. That means you want to create that bottom wick, push up, and then flip the body of the closure. Dollar needs to get rejected at the body right there to push down. The lower the wick, the stronger the buyer stepping in. Like the lower the wick, actually, the better it will be if he eventually will flip here. Let's be patient with our song. Let's not waste our time too much. We be patient, be patient. Let's see. It's same as yesterday. Yesterday it worked out perfectly. Let's see if we can find that today as well. Well, that's a beautiful thing. You have a closure. Okay, that's one thing. But then the next one is, okay, you want to create a bottom wick. That's the next layer. And then you want to flip. You want to see the demand taking over control. Like taking over. Flip the previous body. And then you have the entry. And let's not overdo our gold song, I agree. It's super, super important. Use it wisely. Just too powerful. Okay, dollar, yeah. The flip, the famous flip scenario. That's what we're looking for. I'm happy with the dollar. Would love to see it coming out actually to the 103 and then reversing to fill up that completely. That previous candle, tap into that zone. Overall, it's okay. It's fine. Yeah, let's see. Yeah, you have now, this is how it works. So you have the closure and you have to wait until it loves this next candle closes, and it needs to close a body or it needs to flip it. You just see buyer stepping. You see strong, bullish candle here, flipping after the break. So the break did all the hard work. Let's say this candle right here did all the hard work beforehand. We broke the trend. That trend line here, the dollar is coming down. The dollar closed below the previous candle, which is great. So these are all good signs. The dollar was getting rejected at this area of supply. It failed to break the swing high of this previous high here. This is all great. So now this candle did all the hard work. We're breaking through everything. Now this candle needs to show us if the demand is actually here. Okay, yes. That's the demand. That's what I want to see here. That's exactly what I want to see. Yeah. I want to see serious break. Let's go. And I'll tell you exactly when I enter. Ready to the stop loss will be underneath. The month is stepping in. That's it. Closure is good. Look at the dollar. Dollar wants to flip here. Dollar is holding support here. That's why. If the dollar flips that previous wick as well, boom. We're going to look for the continuation. We're going to fill up that gap here. We're going to continue to the next one. Okay, there we go. I'm in. I'm in right now. Let's go. I'm in the trade. Let's do it. Let's continue now. That's what I wanted to see. That was the actual confirmation I was looking for. Still the same issue. I'm trying to figure out all the time. Still the same issue. I do it manually. Whatever. It's fine. There we go. I'm already in. Just to clarify it. Okay, stop loss at 7.5. There we go. $19, 10. That's all I need to know. Boom. 10.7. Okay. Let's see. Let's see. Probability game. That's exactly our entry strategy. We broke above it. Let the rest do the work and see. Nothing to worry about. Now we're looking for the continuation. The month is coming in. The big candle did the work. Dollar is coming down. It's up to the rest right now. Let's see if you have the same success as yesterday, or at least the last couple of streams. Stop loss under the previous wick. Now we want to look for the continuation here. Yeah, let's put in our song. We need our gold song right now. Let's put in our song. Guys, do you ever add positions? Yeah, sometimes if you break, if you now significantly come up, let's say you come to the 1917 and you do that as well, I would potentially add a second trade, but that's it. Let's see. We have our position ready. Show some volume. Let's go. Shows that's a continuation here of the breakout. 1 minute left until the 15-minute closure. Stop loss under the previous wick, below the previous wick here. TP is in that gap. Okay, right in that gap here. I would say first of all 1915 is a great area to look for. The month is coming in. It's a patience game. You see how we not wait randomly above this level here to enter straight away. We really want to wait for that closure. Now we see the month coming in. It just hires the probability. Should be like a 70%. So 3 out of 10 losses. 7 out of 10 wins, roughly. With the confidence of the dollar, of course. Dollar now is in that zone. Okay, this is an important moment. This is what's holding us back a little bit. If the dollar now decides to indeed fill up and now continue here, and then starts flipping, then we are in a very good spot here. The demand is there. Demand is there. Now we need to break through it. Let's go. Xau says today at sushi from yesterday. Let's see. Yeah, we had some. We had a good trade yesterday. Let's see if we can continue here. But we really start to need pushing. We need to start to push now. I'm gonna give it the next 3 minutes to break out to. Bro, you can even try to use 30. One trade at a time, one trade at a time. We have a lot of things to focus on. So let's focus on gold. Okay, getting there. Come on, let's push. Let's push and break. Dollar indeed, that's the exact point where I wanted to see that rejection from. Now you want to see that flip. If you see that flip happening, it's game over. It's game over in our favor. It's game over in our favor here. Stop loss is right below it. We risk half. Okay, it's not really a bigger risk. The normal risk would be above 1917. But it's really time to push it. I give it the next 2 minutes and 20 seconds. 2 minutes left. No, sorry, 1 minute and 10 seconds left. Yeah, let's see how it goes here. Ten more minutes till the next closure. Is it like the same thing as last time? Where we had it until the last minute of that closure? Let's see. Let's see. I mean, demand is still there. Demand is still there. And this is where you want to definitely take some profits. 1914.8. If you come down and you break that low, let's say 1915 for sure. Take some profits there. You should then come back to that overall range. Yeah, we're getting suppressed pretty heavily right now. Stop loss below. It's better than watching a movie, right? Much better than watching a movie. Staring at a couple of candles, that's what you need to do. Okay. Look what the dollar is doing. Dollar is building serious liquidity to the downside. Oh. Like watching a horror movie. Yeah, it is a tricky one here. I agree. Thing is, demand is there. Demand is there. It just wants to. It needs to. It really needs to start pushing through right now. If it doesn't, it doesn't. It's that simple. We're going to the next one. Look at the dollar here. Look what the dollar is doing. Let's push down for the dollar. Let's go. Let's come on. Let's see. Let's put on something more chill. There we go. Yeah. Yesterday we had our trade exactly at the same time. Exactly. Can you believe that? Almost 5-minute candle close, 5-minute candle closure. There we go. Doesn't look good. Doesn't look good. Let's see what the dollar is doing. We're still in the game. We're still in the game. Think we'll try 9.5. Okay, let's see. KFC missing. Yeah, I was wanted to order a burger, but I don't know. Didn't work yet for myself. If you do decide to flip, I will potentially look for re-entry later. But I think we're going to get stopped out here. Let's go. Let's push it one more time. Burger King coming. There is no burger. Is there Burger King in Bali? You have Burger King in Bali? Oh, I didn't know that. Come on. Let's give us that food, that final push. Let's go. You're in Bali? Yes, I live in Bali here for a couple of years already. Okay, it's over. It's over. It's over. Take the bandage off. Come on. Just do it. Take the bandage off. Yeah. Okay. That's it. Out. All right. Our first loss in a couple of streams. We didn't push through. Confluences were there. We didn't push through, unfortunately. It is what it is. All stream waiting for an entry and then still a part of the game. Part of the game. Take a look at the 23rd of June, same as today. We're gonna add this one, right? We're gonna add this one to the sheet. Order market is still bearish. No, I liked it a lot. We had a closure above it. We had a nice push. We had a nice amount of volume. We created a beautiful bottom wick when we opened our new candle. We came down. We didn't enter right away. We waited for that candle to give us that, show us that demand here. We came all the way up from the same level. We didn't even fill that wick completely. We came all the way up. And this is where you want to see that push through, at least to that gap here, to the 1950, fill out the imbalance. That was the idea. And that was what we wanted to accomplish. All right. It is what it is. We win some, we lose some. Luckily, we win more. So yeah. Very far from unfortunate here. Let's see what we have. The dollar is indeed pushing up. Let's see where we're at right now. Okay, we came down. We closed below the previous candle. We came back up here. Let's see on the 15 minute, 5 minute as well. Let me see the zone. Okay. I still think I still believe that there is a possibility here. Let's see what the volume is doing. No, the 1 hour closed below as well. Okay, now next time, tomorrow back with a new session. We'll just continue our journey right there. We've tried after 4 hours, same as yesterday. Yesterday we succeeded, today we didn't. So yeah, pay very close attention. If you are still in, be careful, be very careful, okay? We are still above this level, so as long as we are above this level, you still have something right there that you could potentially take in consideration, in 1910.3-ish, something like that. Overall, 800 likes today. That's really mind-boggling. Thank you so much for the support, though. You guys know our story. You guys know how we enter now. You guys know what we're doing. And yeah, you can win 5 in a row and lose 1. That's part of the game. Okay. So thank you for your time today. We tried it. 5-hour stream. And yeah, we're pushing it for you guys. Just remember that. We're pushing this for you guys all time. Okay? I'm going to be back tomorrow. I wish you all the best. And again, be in our Discord, join our Limitless Lounge, be part of our beautiful community overall. Keep you guys updated constantly on a regular basis. Making sure that, you know, we're looking at the right setups right here as well. If you want to be part of that soon, our Instagram will be launched as well, our Instagram channel, which will be even better for, you know, free signals and all of that stuff. All right. Thank you so much. Talk to you guys tomorrow. See you then. Bye-bye.